So, good morning, everyone. We have another exciting days with many companies presenting today. My name is Gisli, Head of Research for ABGSC, and today we have Midsona and Peter Åsberg, that is CEO of the company. And the floor is yours.
Thank you so much. Very happy to see so many people in the audience in this early morning hour. I would like to take you out on the journey of Midsona, where we come from and where we're going. And investing in Midsona is about investing in healthy and sustainable foods, i.e. foods that are good for the people, but also for the planet. That means typically organic food, natural foods, a lot of plant-based foods, i.e. vegetarian products and vegan products. And being an investor of Midsona is also being on a growth journey. As you can see, Midsona has been growing tremendously for a number of years here, very strong growth. It's a mix of organic growth for our key brands, but also a lot of M&A driven growth. And we have continued to acquire this year, so I would say that the pro forma turnover of the company is about 3.5 billion nowadays. So we're continuing to grow. So I would take you on this journey, where we come from and where we're going. And it all starts, we are prioritized brands within health and well-being. And most living Swedes in the audience, I assume that you know quite a few of those brands. And hopefully, and probably, you're also consumers of some of the brands that we have in the portfolio. These are now 2018 figures, so they have changed a little bit since we have done some acquisitions. But in 2018, about 50% of our turnover was from organic products. It's close to 60% today. About 25% was health food products and plant-based foods. That's down to about 20 now, since this part has been growing. And the rest is self-care products, i.e. dietary supplements. And as I said, we have a number of iconic, strong brands in the portfolio. I hope and think you know many of them. Horticulture, a leading organic brand in Denmark and Finland. Kungmarkatta, a leading organic brand in Sweden. Detta is our organic brand in Germany. And Friggs, you probably know, in corn cakes, rice cakes, conventional healthy foods. And then a number of other strong consumer brands within healthy foods. I would like to take some time to explain the growth journey that we have been out on and the driving forces behind that growth journey. And it all started in the Nordics around 2011, 2012. At that point in time, we were a 100% Nordic company. What we saw, and a lot smaller company also, I should say. What we saw at that point in time was some very interesting things. The market for health and well-being products was extremely fragmented. It was mainly made up of small and medium-sized family companies. There were few strong companies, few strong brands. A lot of the products were sold in the health food stores, and you did not find so much of it out in the mass market, the grocery trade, the big retailers. And we saw a growing interest in health and well-being among the population in the Nordic countries. So we saw a business or an industry that was ripe for consolidation. And that was our journey for a number of years, to grow our presence in this region by building our own brands, but also via M&A activity. So we bought a lot of small and medium-sized family companies. We integrated the companies in the Midsona portfolio and become stronger step by step. This was our growth journey until about 2017. And in that point in time, we had a leading position in the Nordic countries. There weren't that many obvious acquisition targets anymore, so we decided to focus on the brands that we already had in the portfolio. And we started to look at the rest of Europe instead. And what we observed then was both interesting and motivating, because pretty much the same scenario that we saw in the Nordic 2011, we saw out in Europe 2017, 2018. i.e., a very fragmented industry. We made a major analysis and we found 1,000 small and medium-sized family companies in the rest of Europe, so a very fragmented business. A lot of the sales still in the specialty stores, and a growing interest for health and well-being. And the fact that a lot of the sales are in specialty stores means that a lot of consumers are not being exposed to the product. So moving it out to the grocery trade typically will help consumption of the product, i.e. more consumers will have access to the product. So we started a new journey, i.e. the same type of consolidation journey that we made in the Nordics, we're now doing out in Europe. We made one major acquisition in Germany 2018, and we have quite recently made an acquisition of a company called Alimentation Santé in France and Spain. So this is now our new journey to do what we did in the Nordics, also out in Europe, and thereby continue to drive growth. The industry, health and well-being, is quite a hot industry, and an industry with some strong underlying trends. People are becoming more and more aware of what we eat to stay healthy. They exercise, and that in itself drives the interest for healthy food. And you can see here the growth for plant-based products, i.e. vegetarian and vegan products, compared to conventional products. So it's 2% growth for all food and 20% for plant-based foods. The growth of organic products, i.e. ekologiska produkter in Swedish, is an average of 9% per year across the globe. And also a growing interest in sport nutrition products, i.e. products that you consume when you do sports. So we are in markets that are really, really growing. Our way to capture this growth and grow the company goes by our 4 strategies. With a vision to become one of the leaders in Europe in foods within health and well-being. The first strategy is to drive our brands, the brands that I showed earlier on in the presentation. The second strategy is to be very active on the acquisition front. As I said, we have found 1,000 companies out in Europe. We won't acquire all of them, of course, but there for sure is room for consolidation in this market. So we'll continue to acquire quite aggressively. As we are growing, it's becoming more and more important that we have a cost-efficient value chain. And we have done quite a lot of work in terms of streamlining cost as we have been growing the company. And last but not least, very important that we are both healthy and sustainable as a company. And this is something that is increasingly demanded by both consumers and customers. What is it then that puts Midsona apart from other companies in this industry? I think that there are 3 factors that are clear competitive edges for us. One is that we have full command of the value chain. from the growers. These are actually all these people here. They are employees out in the fields, actually. I mean, with the growers. We have our own production, predominantly in organic foods. So we are very strong when it comes to production of organic foods, and we have 6 different production sites across Europe, doing everything from vegetarian dry products to spreads to plant-based meat alternatives, which is a trend that is very hot right now, baby food and beauty care products. And we are mainly doing our own brands, but we're also doing private label for the big retail chains in Europe and food service products for hotel restaurants and so on. The second key competitive edge in the company is the fact that we have a strong knowledge of brands and how to build market-leading brands. We are quite proud to say that we have the market-leading organic dry brands in all the 4 Nordic markets. Kung Markatta is the leader in Sweden, Urtekram in Denmark and Finland, and the brand Helios in Norway. And we have the ambition to create similar positions for our brands out in Europe and markets like Germany. The third competitive edge is our ability to acquire good companies and also to integrate them into the Midsona franchise. And this indeed is a long, long list of companies, and I will not go through all of them. But I would like to point out a number of important points here. Number 1 is that we do 2 different types of acquisitions. We do what we call platform acquisition. That is when we establish a new base in a new market or in a new segment. Those companies are typically a little bit more expensive, but we also buy more quality. We buy usually a lot of production capacity, brands, and customer connections. What we then do is that once we have established a platform, we do what we call add-on acquisitions. That are acquisitions that are smaller, maybe just a small product line, but we can then integrate them into our system and get quite some good synergies out of that. And we can also acquire those smaller companies at prices that are typically a lot lower compared to the platform acquisitions. And this is a long list of the acquisitions that we have made. They range from typically 4 to 7 times EBITDA for add-on acquisitions to 10 to 12 for platform acquisitions. And after synergies, we have been able to get the multiples down. Importantly also is that we have increased our acquisition pace in the last year. So we've done 3 major acquisitions this year. So this is also a signal that we're stepping up the pace in terms of consolidating the European market now. I talked about this earlier. This is the analysis we made of the European market for health and well-being, the Western European market, I should say. And as you see here, we found not 1,000 companies, but 998 companies. I'm quite confident that it will not look like that in the future. This is a market that will consolidate, and we want to be one of the consolidators by buying up a lot of good companies within this business to become one of the leading ones in Europe. Our latest acquisition is one that we're quite happy about for a number of reasons. We bought the company Alimentation Santé, and we own it as of 1st of October this year, so this is brand new. This is for us a double platform in the sense that it's a platform in Southern Europe, Alimentation Santé has businesses both in France and in Spain. But it's also a platform in the sense that we are established now in a new, very promising category, i.e. plant-based meat alternatives. As you know, or probably know, people are more and more shying away from eating meat for health reasons, but also for the good of the planet. And then you need other protein sources instead. And Alimentation Santé has production and a brand in plant-based meat alternatives. So they produce products like vegetarian burgers, nuggets, but also the major protein sources for vegetarians like tofu, seitan, and tempeh. So this is an acquisition that we are very happy about indeed, and an acquisition that is very strategic for us. We have this year put new financial targets, or announced new financial targets. And we are actually increasing our growth ambition. Before it was 10%, and we're now at 15%. So our ambition is to grow the company by at least 15% every single year. That should be done by a mix of organic growth for our brands. We typically say that we should grow our own brands by about 5% per year, or at least 5%. And then we should add 10% of acquisition-driven growth to get to 15% per year. We target an EBITDA margin of 12%. In the last quarter, we were just above 10%. And the way to get there is to grow our brands faster, to do acquisition, and then integrate them successfully. And we also have a number of efficiency programs and cost savings programs running at the current moment that should take us from the current 10% to about 12%, or over 12%. We say that we should have a gearing of 3 to 4 times when it comes to net debt versus EBITDA. And this is also a signal that we want to be active on the acquisition front. We want to be part of this consolidation that we see coming in Europe. And we should, of course, continue to give dividends to the shareholders. I think I can go on for a few more minutes here. A few words on our recent results. Summary of Q3. The prioritized brands, i.e. the 8 brands that I presented earlier, grew by 12% in total. That is something that we are very happy about. We think that that is very strong growth for our key brands. Total, excluding Alpro, we lost a contract, a distribution contract, but excluding that, we grew by 5%. EBITDA was 77 million, just above 10%. And in the third quarter, we did 3 acquisitions. Alimentation Santé that I talked about, but also an add-on acquisition in Germany, a company doing organic spreads, Eisblümer Naturkost, and a small acquisition of vegetarian frozen products in Sweden, Eco Gourmet. So net sales, 4.6%, excluding Alpro, plus. EBITDA, 77 million plus 13.2%. An EBITDA margin just above 10%. So we're doing good progress towards our objectives. And this is pretty much a summary of this, how we have been doing. But I think I go to the last page, which is the summary page. We are on a growth track. We have the ambition to consolidate the European market for health and well-being. We have recently completed the acquisition of Alimentation Santé, meaning that we now have a strong platform also in Southern Europe, and importantly, a strong platform in plant-based meat alternatives. There are some good underlying trends that helps us. People are becoming more interested in this industry. People want to eat healthier, and that drives the growth of both the company and the industry in itself. The European market will look different in the future. It will not be as fragmented. We will be there and be one of the big consolidators of this market, and that is what should really propel our growth. We continue a solid financial performance, had a good third quarter. So we are on a growth track. We're happy about the progress that we're making, and very excited about the future journey for Midsona. Thank you.
Thank you, Peter. Åsberg, to correct my...
That's okay.
Yes. So maybe we should start with top-down question here. You have to correct me if I'm wrong here, but I think that organic food sales in Sweden and Denmark is around 10 to 14% of all sales. If you go to the rest of the Europe, many countries is below 5%. So first question to you is that why is the gap so huge? And number two, what is your view on that? Will it gradually close?
That's a very good question. As you say, Denmark has the highest per cap consumption of organic products in the world. It's about, I think it's 13 to 14% by now, and Sweden is above 10%. In my mind, one of the main reasons for this is that organic products were mainly sold in the specialty stores before. Then it was moved out in the grocery trade, i.e. the ICAs, the Konsums, the Coops, the Axfoods, and so on. And that made the product available to a lot more people. People took interest in that and started to consume more organic products. And that is what has driven the growth in the Nordic arena. And this is what is so exciting about what we see now in Europe. We see a gradual transformation from mainly specialty stores to the grocery trade out in Europe. And we think that that will propel growth in many European countries. For example, to compare, in France and Germany, per cap consumption of organic products is about 5 to 6% compared to the 10 plus that we see here in Denmark and Sweden. In Spain, it's only 2%. Will they close the gaps? It's hard to tell, but I'm sure that the growth will be a lot faster in those countries in the future, and that they will gradually come closer to the Swedish and Danish levels. And that is one of the main triggers why we're out now trying to get a grasp of the European market for organic foods.
And a follow-up question that, as you said, you have started to look for acquisitions outside the Nordics. You have done a few. When it comes to price tags, elaborate a bit on that.
Yeah.
Nordics versus rest of the Europe, you have said many targets. Is it so that it's similar opportunities, or is the price tag too high in some countries?
I would say it's pretty much the same, I would say, overall. I talked about our platform acquisitions, i.e. the bigger acquisitions. They're usually at 10 to 12 times EBITDA, while the smaller add-on acquisitions are 4 to 7 times EBITDA. Where you see some very high price tags are when it comes to plant-based meat alternatives. And I'm sure that you've heard about the Incredible Burger or Beyond Meat in the US, which are traded at very, very high multiples of prices. I don't even know if they make a profit today. So in that sense, we're very happy about the acquisition of Alimentation Santé, because there we also acquired a company doing plant-based meat alternatives at what we think was a pretty decent price tag.
And maybe the final question then, as you said, you have done 3 acquisitions in a short period of time. Now you're close to your target when it comes to gearing. Will that lead to that you will have a bit of slow period over the next 6 to 12 months before you can ramp up and continue acquisitions plans?
We are continuously working on acquisitions, and we do so also now. When the next acquisition will come, I don't know, and I can't tell, but we're working on it, and financing itself should not be an issue. The thing is that we are having a very good cash flow conversion in the company. So that means that our gearing is coming down quite rapidly when we stop acquiring. So there should be room and ammunition for more acquisition also in the next year.
I think that was all from me. Thank you very much, Peter.
Thank you.
Good morning. My name is Axel Ingvaken. I'm an equity analyst for ABG, located out of Oslo, and I have been covering gig for several years, and I'm super excited today having Petter Nylander, chairman of gig, presenting for us today, and also the group CFO Tore is here. So I will leave it at that, and you can take us through, Petter.
Thank you so much. Thank you for having us this morning. So as you heard, my name is Petter Nylander, chairman of the boards of Gaming Innovation Group since December. And this was prior to our ambition that we also succeeded with to be listed also on Nasdaq Stockholm. I will give you a short business overview, a little bit of how we see, given that some of you in the room are maybe not been investor or not recently investor in the sector, the market dynamics and trends, some key takeaways zooming in on gig, our latest report on Q3, including the financial results, and then summary, and then I'm open for any questions you might have on in the industry or on gig. But I will start by zooming out. We are standing today in Sweden, in the middle of Stockholm, and it's been a very dynamic year when it comes to iGaming or online gambling in Sweden, given that Sweden has re-regulated since 1st of January. So that has had a big impact on the Swedish geography, and given that many of the strong brands in the sector actually have headquarters or management or entrepreneurs or founders or investors from Sweden. I think Sweden has been giving a lot of sort of headlines around this. So, but if we zoom out, I've been in this industry myself for 20 years. Started when I worked for Ullenvik, being in the board of Cherry, Entertainment, and Midsona. But what you can say about gambling is that it's a very old industry, and it will be an evergreen industry going forward. This has been part of the leisure industry for thousands of years. This is a Great Wall of China. It's financed partly by state lotteries. There's a lot of things in Sweden that's financed by lotteries in many countries in the world. It's been seen as a fair taxation by the population. So if you look at the industry, if you look at from a climate perspective, long-term perspective, gambling will always exist in one form or another, and now technology, since the last 20 years, has sort of disrupted the industry. Now re-regulation happens, which creates a cloud of the industry and uncertainty of this sort of what's the profitability for you as an investor. I fully respect that perspective, but I'll try to educate you a little bit of our perspective on what's going on. So looking at gig then, we are a very ambitious company, given that we have many business areas. We're covering a lot of parts of our business is targeted towards business to business. That's including a platform service that we help online companies to sort of fast forward themselves into a digital environment. We also provide sports betting services, media services known as affiliation, where we help even competitors to ourselves or others to get new clients, or other companies that would like to work with us on the media services thing related to marketing. We also do managed services. It can be everything from customer service to strategy to CRM, etc. And then also we have a business to consumer side of the business, where we have our own brands, where we are targeting certain geographies to make a business out of that as well. For those of you are following us, we appointed a new CEO in connection with the Q3 report. It's someone who we are very happy about, given he comes from our own ranks. It's Mr. Richard Brown. He's been in the industry for more than 10 years, most recently as a COO for our own company. He's well liked. He's the profile we're looking for to create value creation for shareholders going forward. So very happy with that announcement and what we've seen so far from Richard and the management team. So gig, shortly, we're about 650 employees. We have offices in Malta, Denmark, Gibraltar, Norway, Spain, and US. We have licenses, Malta, UK, New Jersey, i.e. US, Sweden, Germany, Schleswig-Holstein, Spain, and Romania. About a lot of movements here, but roughly 60 million euro in market cap. We, as I said, also listed in Oslo as in Stockholm on Nasdaq. We have 4 B2C brands and about 34 customers on the B2B platform as of today. Looking at the market then, so we are standing in Scandinavia, or in Sweden in particular today, where the penetration of digital or online gambling is one of the highest in the world. But however, looking at it from a global perspective, and why I say global perspective is that GiG has good global capabilities and clients everywhere from New Zealand to the US to Scandinavia. So if you look at from that perspective, it's still relatively early days, where the lion's share of gambling is still done through sort of physical analog channels. But if someone turns 18, and many countries in the world are allowed to play and gamble, they wouldn't go to a retail outlet, they will go online. So the underlying dynamics will continue, and someone like GiG is sort of a catalyst and fast forwarding this development as we help the likes of land-based casinos to fast forward themselves into a digital environment. So we think that's going to be a very sort of interesting space and a nice segment for someone like GiG to create value going forward. The world is big, and there's a lot of movement given the transformation. People have better handsets, which is sort of where the industry is moving, more to mobile. And there's re-regulation sort of in the making in a lot of parts of the world. So it creates a lot of opportunities for someone like GiG, but also for many of our competitors to sort of look at where's the next big thing. And as I said, we have been successful both in the US, where it's so state-by-state re-regulation, but also in APAC, in New Zealand and elsewhere. And that's the way our sales team on the B2B side are looking at things. We're looking at things globally. Where can we do good deals? So we're out actively, globally, looking for good sort of joint ventures for our B2B platform services. Looking then what we're doing in the company right now, after the Q3 report, or in connection with the Q3 report, we announced that we are going into a strategic review with the company, even though we like that we have a broad scope, that we have been very ambitious, but we also think it adds complexity to the company. It's difficult for you as a potential investor or existing investor to follow the business. And also the way we allocate cash and capital investment, we want to have less complexity. So we have given different advisors a broad mandate to look at is there market appetite for some of our assets or joint ventures or what have you, in order to drive the business easier, but also creating shareholder value. Also, the industry was somewhat negatively surprised with the market dynamics in Sweden short term. Also in the UK has been some developments that are not so favorable for the industry. So we are adjusting to the new reality. We are reallocating marketing funds, etc., and focus areas, etc. And in general, we are having a big discussion on how we should invest going forward in order to drive shareholder value. That could be the sportsbook or other areas where we think we want to see better progress, as we have seen so far this year. So the objectives is really to identify value-creating opportunities, reduce complexity, improve efficiency, strengthen our strategic position, and drive our ability to execute in all areas. So we think we're actually in a very strong position. We think the industry itself is good if you look mid to long term, and that we have a strong position and credibility. However, we want to sort of make the foundation for the company better by reducing some of this complexity we have in the business today. So we are reducing cost. Here you can see on the right-hand side the trend when it comes to headcount. We have also stepped out of some of the investments. We had a studio called GiG Games that we felt didn't really progress in the way we felt was necessary. So that was divested, saving us some money going forward. We're also having a lot of focus on our tech platform, reducing costs that we expect to materialize next year. Also, we have reallocated funds into geographies for our B2C side, where we see better return on investment, moving away somewhat from some of the Scandinavian markets and the UK to other more promising markets. And in general, sort of driving through efficiency through the entire organization. Zooming in on the financials, this is high level, the Q3 results. I will zoom in on the business areas so you get a better understanding of what's going on, starting with the B2C side of things. Here you can see that we adjusted to new reality. This is Q3, Q4 last year. Then this was predominantly affected by Sweden, was negative surprise for us and for many of our competitors. So we took down reallocated marketing, and we're pretty happy that we came back actually with a relatively healthy results already in Q3 by being agile and reallocating funds, marketing to countries where we see better return on investment, even though we're trading on a lower revenue than we were in Q4. Media services, that's the affiliation. It's a very profitable part of GIG. We also see the impact of Sweden there, that the player values has gone down this year in Sweden. We'll see where they trend going forward, but we've seen an impact, even though we have still very high profitability. We've seen the impact of Sweden in this business area as well. However, in these revenue numbers, it's a very mixed bag of very strong growth, some areas very promising, new things. We even have, as some of you know, started in the US with some media assets. So this is also an area that we are sort of reallocating, looking at where should we spend our focus going forward to protect and drive value in this very valuable area of GIG. Platform services, where we offer services to other brands. We have also seen an impact of the white labels. Those who had exposure to UK and Sweden had a negative trend this year, which then affects us, given that many of our contracts historically has been on rev share. So we also seen that impact on re-regulation short term. However, this is one of the areas we see very strong potential for us going forward, and we are one of the sort of most credible brands out there, given that we can win brands like Hard Rock in the US or Sky City in New Zealand. And this is where we can sort of very fast address and meet clients and deliver to clients all over the world to make them going from sort of a land-based to a digital environment in 6 to 9 months. Sports betting area, it's an area of concern for us, given that we haven't seen the KPIs that we want. We spend a lot of money here. It's costing the company a lot of cash. So we are looking at this with some fresh eyes. How can we do this differently? How can we make this profitable area and make sure that this is driving shareholder value? So this is one of the things we're looking at as we speak to address this situation. So the company is very busy with a lot of action points to make sure that we are focusing on driving shareholder value, and we're quite happy actually with the progress. I just came from Malta, that we had a board meeting yesterday. Good progress in everything from overall group level to B2C to media to the platform to B2B sports. So these things are very closely addressed by management together with the board to make sure that GIG comes out of this sort of new reality in a good and stronger way going forward. To summarize, Gaming Innovation Group, GIG, compared to many other in the industry, we have a global position. We have delivered on this opportunity, providing services all through the world, APAC, EMEA, Americas. This year is a tough year for the industry. You can see evaluations going down for not everyone, but for many. Just in this new reality, creating uncertainty where the industry is going. However, we feel that we are well positioned. We need to do some kind of tough decisions, focusing, reducing complexity, maybe sort of stopping some things we have done in the past or divesting them in order to protect the company and drive shareholder value going forward. Because if I look myself on my experience on this industry, working with many different companies, there's been actually a lot of volatility. If you look at valuations in the past 20 years, dramatic shifts, often triggered by re-regulation. I remember when the US came from a situation where it was unclear. Everyone thought legally that poker was a game of skill that was legal in the US, whereas sports betting was clearly illegal through the Wire Act. When that was cleared through the Safe Harbor Act, valuations came down dramatically. I also remember myself working for Unibet when France re-regulated, which was the best market we had at Unibet. But you have to accept this is the dynamic of the industry. It's going through re-regulation. And for those who sort of are pointing fingers or are upset or angry, you know, that's not very helpful. You need to adjust to the new reality and see what's new now, how can we make money and drive shareholder value given the new dynamics. And that's the approach of us. Because if you look at our B2B side of things, the more re-regulation we have, the more opportunities we have to help land-based casinos or other strong brands or other assets to fast forward themselves into this new reality. So we have a lot of opportunities to drive value, also in a regulated environment, and that's our approach. And where on the B2C side, we see more challenges in some geographies, we just accept the fact that we need to move out of certain markets or shift the way we think about marketing So that's the attitude you need to have in this industry, because it is a growth industry, it will continue to grow, and a lot of exciting companies are based actually here out of Scandinavia addressing the world. One of them is GIG. Thank you.
All right. Thank you for that presentation, Petter. GIG is sort of a unique gaming company, given that you have exposure to that many verticals within the industry.
Yeah.
Now, when I look at the segments, when you look at the first two segments and you add the earnings for those segments, for example, Q3, you get to almost 7 million in EBITDA. But then you have the two other segments, the sportsbook and then the platform services, and you add that, and then you get down to the group figure, which is 2.7 million. So you talked about that GIG now has initiatives on improving profitability in the other two segments. Could you elaborate on that, and also with respect to timeline? For example, on sportsbook, when do you expect to break even, and how can investors be confident that you will reach those targets?
Yeah, so we start with sportsbook. We have said that during next year, or preferably first half year, we should be profitable sportsbook, either through sort of organically or addressing it in a different way. If you look at the industry, 20 years, and even today how we work, you can also think in terms of ecosystem. The beautiful thing in this world that you can do a lot of partnerships in one way or another to reduce costs and share costs, to create more scalability. That's one avenue that we're entertaining. But one way or another, we'll make sure that next year the sportsbook is profitable for us. We don't find these numbers acceptable, and we understand that shareholders agree with us on that point.
But
on the sportsbook we're talking about.
Yes, just following up on sportsbook, because of course you have obligations, you have signed deals on sportsbook. For example, you have a large partnership in the US with Hard Rock, and then delivering sportsbook services to them. Are you in any way obligated to deliver service to them such that your hands are tied?
You know, when you work like we do with our clients, we are in daily, hourly contact. We become almost friends because you work so intimate. We are part of the blood system. So these kind of discussions, of course, are very transparent, and it's subject to their approval. If we were to make any changes, new, fresh way of thinking, they are definitely it's subject to their approval, and we are very transparent about it. That's something we do in collaboration. And so far, the signals I'm getting, it's very possible to do changes if we would wish to do so. So we don't see that as a blocker.
Okay. And then the platform.
The platform is somewhat a different answer, because we see it as very strategic. We are going through an investment phase. We are, for example, running on 2 platforms right now. So hopefully during next year, and that will be more the second half year, we have sort of consolidated that, and we see that we can save a lot of money, everything from sort of cloud services to having some double functions and so on and so forth. But that's the long play, where we think that we can sort of really drive shareholder value, adding sort of new brands on our platform. So that's an area that's we're going to keep on investing, but more cautiously. And we know there's a lot of, and I've listed some saving opportunities there, given that we have been very ambitious, and we are sort of getting closer to a situation where we can consolidate into one single platform. But a platform service will always need investments. It's a dynamic world, so it always needs some investment, but not in the pace that we have done it in the past few years, I would say. And again, the world is moving so fast. There's so many good entrepreneurs in this space. So every year there pops up new potential partners that we can share sort of competence and plug it into our basically horizontal thinking, where we are turnkey solutions for our clients.
Looking at GIG from a group level, so you delivered around 9% EBITDA margin now in Q3. For 2018, it was 11%. But you have assets such as the media business. It does 50% margin. The platform business should be a high potential margin business unit.
Yeah, definitely.
So what kind of margins do you expect GIG to have the potential to reach in, say, a 3 years' time if you execute on your strategy?
We haven't guided on that, but as I said, and if you read between the line, the board and management clearly are aiming to improve margins going forward, and we think there's quite a few things we can do at our sort of hand. Costs are easy to address. Revenue is more, it's subject to what happened in the market. But overall, the ambition, of course, for us is to improve the margins, but we are not guiding on a particular sort of threshold or number.
All right, fair enough. And one last question. We have focused a lot on sort of cost initiatives, profitability, but pivoting towards growth.
Yeah.
You mentioned US, you touched upon it,
Yeah.
and you are also expanding into new markets such as Spain, Croatia. Can you talk a little about the growth opportunities and also how expensive will that growth be for you guys?
Yeah, so as you heard me, I came in December, and I started my career after my business degree working for Ullenvik and when Jan Stenbeck was alive. And he had a very fresh, I think, approach to profitability. It's where you can make good money, make good money. Just because a country or something, everyone's running to it, maybe you should run somewhere else. I remember when I worked, I was a young trainee, everyone was questioning Millicom. What are you guys doing in Africa, Latin America? Are you crazy? And no one really questions that in the past few years. So we have a global approach. I look at every potential deal from a deal perspective. Is this good for gig or not? We shouldn't be dragged into this kind of sentiment that because of excuse my French, investors rather think, oh, everyone should go there, or everyone should go there. What happens that everyone goes there? Maybe we should go somewhere else. So our approach going forward on the platform side of things is to make good deals.
Yeah. Yeah.
Profitable deals.
Yeah.
More joint venture spirit.
Yeah.
I'm not going to accept, if maybe there's some exceptions because of signal value of certain deals. But it's better to make good deals in a country that few know of than to make a really crappy deal in a country where people think it's a cool country for some reason. We're here to make business and drive shareholder value. So we're going to be that's the filters.
Yeah, very good. Very good. I think we'll stop there. Thank you very much, Petter.
Thank you for having us.
Yes, thank you.
Thank you.
So, warm welcome everyone to ABG Sundal Collier Investor Days here at Haymarket. My name is Rickard Anderkrans. I'm an equity research analyst in the healthcare sector at ABG. So I will be hosting today, and I will be holding a short Q&A session after the presentation. So with no further ado, I would like to welcome the CEO of Enzymatica, Fredrik Lindberg, to the stage. Floor is yours. Thank you.
Thank you very much. So welcome to this session. We will talk about a common cold product called ColdZyme. Cold because it's common cold, and zyme because it contains an enzyme from Atlantic cod, the fish. There was a lot of information in less than 10 seconds. This is me. I'm the CEO of Enzymatica since 2015. I'm a physician, and I'm an associate professor in clinical pharmacology. So I'm trained for this world. I also started an orthopedic company in 2001, which is now listed on small cap. Enzymatica. It's a company located in Lund, a big university town in the southern part of Sweden. The closest capital is Copenhagen. We speak half Danish and half Swedish. And the first product we put on the market is ColdZyme. It was launched in Swedish pharmacies already in 2013 for prevention and shortening and treatment of common cold. In 2015, it was listed on First North, and we are today 18 full-time employees. The enzyme is one of the core components. There are two core components, and we manufacture the enzyme ourselves in a unit in Iceland, in a small company that we acquired a couple of years ago. Today, ColdZyme has 6.4% market share on the Swedish common cold market, and we are currently growing with more than 20% sales value. So on the 7th year on the market, we are still growing substantially. In 2017, we partnered with one of the biggest European pharmaceutical companies, and they started selling ColdZyme in Germany, Austria, and Belgium. I will tell you a little bit more about that. The two big pharmacy chains, Boots and Lloyds, are selling our product in UK. Last year, we did a 100 million Swedish krona rights issue, and at the same time, we closed a distribution agreement with one of the biggest Japanese life science companies. And then it takes time to get the product approved. It's CE marked in Europe, but in other countries, you need separate approvals. This year, we did a technology agreement with a cosmetic company. So we are selling our technology and a specific formulation containing the enzyme. And over 3 years, the value of that agreement is at least 12 million euro. So what is ColdZyme? It's the most sold product to prevent and shorten common cold. Most of the products on the market in Sweden, in Scandinavia, in Europe, and globally are for treatment of symptoms. So you have a stuffed nose, or you're coughing, or you feel bad. Then you go to the pharmacy and buy something to alleviate the symptoms, to bring them down. While ColdZyme is unique because it attacks the virus and brings down the amount of virus in the throat and nose, and thereby you can bring down all of the symptoms, and you can shorten the cold period. So it acts through a barrier. I've already talked about that, but I can show you most of the virus, at least in the start, are growing in the throat. So it's not that you start with a blocked nose. It starts with a tingling feeling in the throat, a sore throat feeling. It's because the virus is growing there initially. So it's important to attack the virus by spraying in the throat. And then you can see a schematic picture to the right. virus is coming, the cold-sime barrier containing of glycerol, which is a sugar alcohol, and the enzyme, protects the mucus cells, the mucous membrane, from the virus. If the virus still comes down to the mucous membrane, the enzyme cuts off the surface proteins of the virus, so the virus cannot attach to our body. So it's without attachment proteins on the surface. This is a picture of all known common cold viruses, and it's a laboratory study made in US, and it shows that cold-sime inactivates common cold virus. 5 of the known viruses up to 99.9%, and 1 of the viruses to 65%. So it's not a 100% product, but still it covers most of the common cold viruses. Cold-sime is a medical device. It's not a pharmaceutical. It acts outside of the body. It acts in the throat, but outside of the body. And it deactivates virus. So it's not a pharmaceutical. That means it goes quicker to get approval. But still we need that in most countries. Today, we have a geographic focus in Europe because we have a CE mark, but we have also closed deals with Japan, Hong Kong, Australia, and we launched in South Africa this year together with a partner called ABGSC. Last time I was here in September, I told you about the cosmetic deal. I also told you about the South African launch. We have also launched a new taste, a line extension, in Sweden and Denmark. And I also told you that we have broadened the indications. So from this year, it's not only treatment of common cold, it's also sore throat and bringing down the symptoms, not only shortening the cold and protecting. Since we met last time, a couple of things has happened. One is that we were conducting a big placebo-controlled clinical trial. We did one big trial last year that had very good results. Now we did an almost identical trial that failed in the matter of we didn't reach the primary endpoint of showing improved quality of life. Of course, we are looking at a lot of other things, and we are expecting to have the results beginning of next year and then have a report during Q2. Right after that, we had a Q3 report showing that the growth for Q3 was 47% in sales compared to last year. And we also communicated that we are going for a bridge financing during next year. We do not have any plans for the moment to do a rights issue. We hope that it's enough with bridge funding, depending a little bit how the sales will develop. And then last week, we announced that we will have a collaboration regarding a mouth spray in Germany with the company Detta. And then you might get confused because I told you that we have a collaboration in Germany with this company. So one slide about that. We launched in 2017 together with Detta, and it was a very successful launch. Immediately, they covered 90% of all pharmacies, and they got a good penetration. But we woke up competitors and were brought in front of a court, and they decided that we were not, or our partner was not allowed to market the product in Germany without having placebo-controlled clinical trials, patient studies. And that is because the German marketing laws supersede the European laws. In all other countries, also in Belgium and Austria, where Detta sell our product, we are allowed to sell the product, claim about the properties of the product, but not in Germany unless we have a placebo-controlled trial. Now we did the placebo-controlled trial, but we couldn't show that it improved quality of life significantly better than placebo. So instead, Detta asked us to develop another spray. It's a totally different spray. It's registered under the cosmetic directive. So it's not a medical device. And it's a mouth spray. And we got the first order last week, 2.3 million. And they are going to launch this product now in January. And then, of course, we are working on trying to solve the problem with the placebo-controlled trials, either because we find something that is of interest in the recently performed study or possibly doing a new study. This is the world we are living in. It's very difficult to do clinical trials and asking people, how do you feel? And then they are going to transfer their sensation into a questionnaire. And it's a lot of questionnaires, so sometimes it's very difficult to take part of these kind of studies. A little bit about Q3. I told you 47% growth compared to last year. Net sales 19.5 million krona, 13.2 last year. Cash flow is improving, but last year we did one big trial, the successful trial. This year we did another big trial, 700 patients. So it has strained our cash. We're not planning to do any big clinical trial next year, so hopefully that will improve together with a top line. This is the quarterly sales year by year since launch, and you can see Q1, it has been growing since 2013. Q2 is low season, it's summer, and then the winter is much better. And you have Q3 there, and you have trend lines. The red arrows are 3 quarters where we were selling together with Stada in 2018 and Q1 2017 and Q1 2018. And the year after was without Stada sales. But you can see that we are growing. We have been growing without being able to sell in Germany. This is more over a longer time. It's moving annual total, so it's every dot on the curve is recent 12 months. So it equals out the season variations. And then you can see the hump in 2018. That is when we started to sell in Germany. But it's growing continuously, even if we don't sell in Germany for the moment. To the right, you can see Danish pharmacy. It's not only us that earn money on Colsam, and it's not only the consumers that benefit from the product. Also, the pharmacies earn money because it's a product that sells a lot and give them good margins. This is official data statistics from Swedish pharmacies, and currently we are number 4 in sales. Otrivin, Strepsis, and Nipaxone are bigger. You can see Bisolvon is smaller than us, Bafusine, Neseril, and we have a moving annual total currently of 30.7%. And the market share for the moment is 9%, but it goes up and down. So it's impossible to fool customers. So after 7 years, we are still growing. It is because the product works and we get repurchase. Big market, Sweden 1 billion Swedish krona, Germany 10 billion, Japan 10 billion, China 37 billion, US 50 billion. We now have a foothold in Germany, and we have an agreement in Japan. This is what it looks like in different countries. Cold Guard, it's called in South Africa, Corta Grip in Spain, Viruprotect in the German-speaking countries. And then we have the new taste. I'll show you a very brief television ad from Spain.
Tienes 48 horas para intentar evitar el resfriado. Esta temporada Llega Cortagrip, que gracias a su fórmula exclusiva crea una barrera que atrapa los virus eliminándolos de forma natural y así evita que avance el resfriado. Cortagrip, el resfriado tiene las horas contadas.
The first 48 hours are the most important. If you treat too late, it's too late. You have to attack the virus while it's replicating and growing in numbers. Our strategy is to grow on our home markets, Sweden and Denmark, where we go directly and then do everything through partners. So we don't have any costs outside of Scandinavia and the studies we do, of course. And we do this with help of clinical data that support the claims and an active patent strategy that makes the distributors feel comfortable. We have a lot of publications. Last year's study showed highly significant improvement of quality of life. That's one reason we did the second study to confirm that, but we didn't reach that high significance, or we didn't reach significance in that study. And then we could show a significantly lower consumption of drugs to relieve the symptoms. Nose sprays, fever, alleviating drugs, and the cough syrup, etc. And this is how quick they become healthy. So the red bars are without coldsime and the blue bars are with coldsime. And then you can see that fewer and fewer have a common cold after a couple of days if they use coldsime. And this is what it looks like in Swedish pharmacy chains. Upper row, coldsime, a lot of packages, and then come symptom-relieving drugs. Okay, thank you.
Thank you very much, Fredrik. So I will just ask some questions. So looking at, could you give us some more information what this new extended agreement with Stada means in terms of their marketing capabilities, and perhaps compare that with the old sort of the Vira Protect solution you had before, and what that means in terms of marketing and what they can do on the market there?
Stada is the #1 pharmaceutical company in Germany, which means that they have a lot of salespeople and they cover all pharmacies in Germany. So we have access to that now, as we had before with the other product. They are also the market leader in all kind of common cold products. So they own the segment. They have the most selling symptom relieving product. It's called something that I have forgotten now. And now they wanted to add our technology to have a complete portfolio to offer their customers.
So are they more limited in terms of what they can say and what they can do in terms of marketing compared to the Vira Protect solution, or is it similar, or how would you describe? Because it's a different regulation, isn't it?
They can say different things. If you have a medical device, you can tell that the product has medical advantages. If you have a cosmetic product, you can't say that it has medical advantages. So, for example, with a product registered under cosmetic directive, you can't say that it shortens a common cold. You have to, and this product is sold to alleviate uncomfortable feelings in the throat and moisturize the mouth and the throat. So it's a totally different product, but it's built on the same technology. So it contains the cod enzyme, trypsin, and it contains glycerol. So it's very important to underline that it is a different product because it's registered under a different directive.
So it should perhaps not be seen as a complete reopening, but rather a new agreement in that sense.
It's absolutely a new launch and a new agreement because it's a different product.
Cool. So looking at the Japanese opportunity, if we could look at that quickly, I know there's no real news in that sense, but perhaps you could give us a bit of an update on that opportunity, because the last communicated date was late 2020 or end of 2020. Does that still hold, and what can we expect there?
We don't know, to be honest. We hope for that, but it's a regulatory process. and they have to understand if this is a fish or a bird, if this is a medical device, class 1, class 2, class 3, if it's a pharmaceutical, or if it fits as oral cosmetic. So it takes quite a lot of time when you go into new markets. And it's the same with US, it's the same with India, China. Everything outside of Europe is unknown until we have the first approval.
So it's a quite big player, but could you give us any information in terms of the coverage that you could get? I know in Germany you had 90% coverage with Stada, but can you give us any information? Is it 10% of the pharmacies, 5%, 20%, or can you give us a range?
It's one of the absolutely biggest Japanese life science companies. And they are planning for a stage launch. So you start with the big city pharmacies, and then you roll it out in regions, and then finally in the countryside.
Interesting. So looking at South Africa and Hong Kong and Macau as well, could you give us just a bit of a deep dive on those markets? How are things progressing there? How has the product been received, and have there been any issues at all?
South Africa is launched. The size is like Sweden, and the launch goes according to plan. Hong Kong, we have shipped product to Hong Kong, but they haven't launched it. They are waiting for final approval. But we hope that there will be a launch this winter season or this cold season. Maybe before Christmas even if it's only a few weeks left.
Interesting. So looking at the Marin agreement as well, as you mentioned, the 120 million 3-year order. Have you received any updates there, and had there been any feedback from the clients? So have you started shipping? Could you give us some additional info there?
We have shipped the first order. So it started 3 years, started in May, I think, or June. So we have a commitment from them with orders during the first 12 months. And then another commitment for the next 12 months, and then for the next 12 months. But I've been in this business for so long time, so normally you get the biggest part of the order at the end of these periods, because launching takes time.
Interesting. And just a final note, in this last quarterly report, you mentioned that there will likely be a liquidity shortfall in the coming 12 months, and you're looking at the bridge financing solution there. How should we think about that? Because you mentioned that you probably won't be looking at a rights issue or a similar solution.
We are not looking for that now.
Yes.
And as I showed you, there is a dip during summer, which strains the cash. So to cover up for that, to not be in a bad situation, we have communicated that we probably might take a bridge loan. And as it looks now, yes, we will do. But of course, the new deal with Germany improves the liquidity situation. And neither we nor Stada knows when the follow-up orders will come.
Perfect. So thank you very much, and thank you all for listening.
Thank you.
Have a good day. Thank you. So welcome everyone to the ABG Sundal Collier Investor Days. My name is Rickard Anderkrans. I'm a healthcare analyst at ABG. So I would like to welcome Surgical Science here to present, and we have Gisli Hennermark, the CEO, and Anna Åsberg, the CFO, here today. And I will host a short Q&A session afterwards. So the stage is yours. Very welcome.
Thank you. Welcome. Nice to see you all. Just before I get started with a short presentation of Surgical Science, can I have a quick gallop of how many has seen a presentation of Surgical Science before? Just raise your hands. All right, good. Then I know approximately what we have to deal with. Surgical Science. I guess all of you step on a plane from time to time. When you do so, you don't really have to think. You know that the pilot has been trained in a simulator. You know that the pilot has been certified in a safe simulated environment. However, if you're unfortunate enough to be rolled into a OR to have a surgical procedure, you don't really know exactly how the technical skills of the surgeon is. So that's our vision at Surgical Science, that everyone going into the OR should know that the surgeon has been trained and objectively certified in a safe simulated environment. And this is what we've been doing for 20 years. So Surgical Science is a company that's been around for 20 years. Primarily, we've been a research company for a long time, building our solutions in order to supply surgeons with simulators so they can train before they work on patients. And if you look at the surgeon here on the picture to your right, you can see when doing laparoscopy how you're standing and you have an inflated abdomen if you're working in the abdominal area, and you're looking up to a screen where you have to rescale what you do with your hands in a volume, in a three-dimensional space, to what you see on the 2D screen. And this is technically very difficult because your movements is different with your hands to what you see on the screen. You have to recalculate that. And just to give you an idea of what this actually looks like in real life, I have a short video here that we got from a client of ours. I don't know if you have a lot of physicians in the crowd here, but this is an ectopic pregnancy. It's a very standardized laparoscopic procedure that you do from time to time, gynecology. And you see this gray area, that's something that's been cauterized in order for it not to bleed. And to go in with a scissor is something that should take about 4 seconds. And they're already been at it here for 15, 20 seconds. Because it's very hard for this young surgeon trying to get the scissors to the right space to find its right space. And this is why you need to train. And you can train this in a simulated environment. It soon ends here with blood and you know, yeah. So I'm just gonna jump forward here. The business of Surgical Science since 2016, when we revised our strategy, is that we work with our own products, educational products. Those are simulators that we produce with our own brand name, both hardware and software, to surgeons in training. So the primary target group, the primary customers here, are the university hospitals that have surgeons that are yet in training. And to get them to work with simulators before they go into the OR and work on real patients. So basically about cutting away the early learning curve and moving that to a simulated environment instead of patients. It's good for patient safety, number one, but actually number two, the time in the OR is extremely expensive. So to use OR time for education is not a good return on investment. So it's you also save money. But then the other area, that's the fastest growing area for Surgical Science, is that we work with industry OEM, we call it industry OEM, basically med device companies that have real medical devices where we can implement our simulation technology, primarily software. So it's a little bit of an Intel Inside kind of strategy. Get our software into medical devices where simulation plays a big role. And we do that often as a white label. We are a component of a bigger solution. And these two areas actually really feed off one another because we can use the same IP, that's our own core asset, our own software technology, primarily software, some hardware technology. And we can use the same developers, the same development organization. And it's a lot of knowledge flowing back and forth between academia, where we get access to key opinion leaders that are often very interested in patient safety, and the industry who wants access to those key opinion leaders. And those key opinion leaders also want to know what's the latest that's coming out in technology, in med devices. So those are the two business areas we work with. And just a quick glimpse of what does our educational products look like. Those simulators that we help young surgeons train on before they go and work on patients. And here you see our product portfolio. And all of these products have been designed by Surgical Science, but we have external suppliers that do the actual manufacturing. These products are not medical devices in a regulatory aspect. So it's not something that you need regulatory approval for. These are educational products. Our largest selling simulator is the one to the left, called LapSim. That's a laparoscopic simulator. So exactly for what we looked at here in the beginning of the presentation, when you do keyhole surgery. Then we also work on endoscopy. So that's when you do an upper GI, you look at your stomach. The same thing, you basically move a tube. It's technically difficult. And also colonoscopy, when you do it from down below, it's difficult to find and be able to look at all parts of the colon. But you can train that in a safe simulated way and get objective feedback, so you know if you're doing good or not. The products are, when you look at them, I mean the simulators, you can feel them, you can see them, you can touch them, but the big asset of Surgical Science is the software. That's where we make a lot of the investments. So we keep on developing new procedural modules, new different procedures that you can work with on the simulators and get better at on the simulators. Today, we're basically from lungs, the VATS lobectomy, down to gynecology. So we work with everything except arms, legs, and head, basically. That's what we work with. And again, to give you a quick glimpse of what this can look at, imagine that you're standing here, you're holding on to your instruments, you're looking at the screen exactly as the surgeon do, but on the screen, you have a real-time, non-linear simulation. So here you can actually try and do a procedure and get feedback on how well you have technically performed it. Again, I don't know, are there any doctors in the crowd? Yep, here's a doctor. Do you see what this is?
Seems to be a gallbladder.
It's a gallbladder, yes. So this is a cholecystectomy. It's a very common procedure, the surgical removal of the gallbladder. So here you have the liver in the behind, and this is the really the core asset and was taking a long time to develop. The realistic movement of the organ and the instrument, the interaction between the two, that's in a way that mimics real life. And in your hands, you will actually get also haptic feedback. So if you touch this in here on the liver, you will have you will feel it in your hands. This is something that's really difficult to develop. I mean, this is not done with any Unity software or any third-party products. I mean, this is hardcore C++ programming, where we have built our own graphical engine in order to do these, and the physics engine in order to do these simulations. Moving on into this other business area that I talked about, that we call Industry OEM, where we find licensing opportunities within the medical device industry. It has a lot of different segments, but the most important segment, and that's really growing for us, is surgical robotics. And surgical robotics is not a robot that operates by itself, but it's a console where the surgeon sits in a console and is moving surgical arms that sits on a robot. And this is good because you get, well, technically you get an extra degree of freedom, so you can move the instruments in a wristed way, but you also get more precision. And surgical robotics has really been growing in the last few years. Initially, it was a lot of urology. So if you were a man and unfortunate enough to get prostate cancer, you would Google immediately and you will realize that, okay, number one is about survival, but number two is about quality of life after the operation. And then robotics has a significant advantage that it doesn't damage the nerve cells so much. And this market has really grown, and here simulation plays a key role, because in order to roll out this new technology, you need surgeons to be comfortable with the technology and be able to perform it in a patient-safe way. And a lot of these companies, they rely on the consumables to earn money. So they want as many of the surgeons as possible trained. The number one company in this area, Intuitive Surgical, has shown some data of how the procedural growth has been in this area. And there you can really see the growth. Initially a lot of urology, whereas now it's a lot of general surgery. So they use surgical robotics in all different areas. When Medtronic, major big medtech company, rolled out their robot in September this year and showed it for the first time, they showed very interesting statistics that today only 2% of the procedures that you can perform with robotic surgery are being done with robotic surgery. So there's still a lot of growth in this area. And if you look then at surgical science and what we do, here are some of our customers in this field. We're working with some of the challengers to Intuitive Surgical. And on this picture here, you see one of those robotic platforms, the console. But in the back of the console here is a computer that's running software that the surgeon here is trying and being convinced about the robot, running this software that's called RevoSim, because the product is called the Revo. It's from Mir company in South Korea. But inside here, 100% of the software is surgical science. So this is a perfect example of how we incorporate our software directly on the med devices around with our customers. Of course, robotics is the most important customer segment for industry OEM, but also within traditional laparoscopy, so normal keyhole surgery, everything is becoming more and more digital. And that's really key for us. I mean, the mega trend of digitalization, because it makes it much easier to directly implement simulation. So here's an example of a customer. You see our simulator here, LapSim, but this new med device, it's called a LigaSure, has a lot of buttons, and actually the new instruments that are coming out already have microprocessors. So it's already digital, which makes it perfect to adapt directly to simulation. So you can use it when you market your instruments, when you try new instruments in the R&D process before you have put in too much money, when you convince regulatory bodies, not at least FDA, that's becoming more and more strict, that you as a supplier have to show that you have a patient safe way of rolling out your products. Along this strategy of working more with industry OEM customers, Surgical Science did an acquisition in the end of June of a company that's extremely focused on working only with industry OEM customers and only software. This is a company called Sense Graphics. They have Intuitive Surgical as their main customer, so the incumbent robotic company. And as you can see, a very profitable company, because this business of software embedded in med devices scales at a much faster, basically, than educational products do. But combined, these companies become very strong together, and it's also a company that had a lot of software developers. So it was a company run by two fantastic entrepreneurs that are still with our company and still keep on working together with us. But they had basically hit the ceiling as a company. They needed to structure their business in a very different way. And that had already been taking place at Surgical Science, because we'd already built processes and structure and basically platform for growth. And this acquisition, we have some just short figures on that acquisition. I'll let Anna, who's the CFO, run you through that.
This is what the deal structure looked like when we bought Sense Graphics. We paid 300 million cash and debt free for the company. That was divided 60% cash and 40% new shares in Surgical Science. And for the cash part, we did a new share issue amounting to 200 million Swedish crowns. We are very happy with the new owners that we got when we did this new share issue. We now have owners such as AP2, AP4, Handelsbanken Fonder participated, as well as Humle Kapitalförvaltning, TIN Fonder, and some other large Swedish institutions. And we consolidate Sense Graphics as of July 1st. So we will look at some numbers in a short while.
Just quickly before I let Anna run us through a little bit on the numbers of how we look like as a company in the last quarterly report. Because of the acquisition, the business became significantly larger. So we just now, with the Q3 report, we communicated new financial goals. So in 5 years' time, our financial goal is that the company should have a total turnover of 400 million Swedish crowns. And that may include some complementary acquisitions. Our educational products, our core, where we have our own IP, should grow on average during this 5-year period of 15%. Industry OEM, which will have a larger growth, but a bit more uneven, because it depends on when our customers launch new products. With a 400 million turnover, EBITDA of at least 40% is our profitability target. And Anna can comment on what it looked like here in Q3 just recently. We also set a dividend policy, updated that, so on a 1 to 3 year horizon, we don't expect to do any dividends, but on a 3 to 5 year horizon, 30% of our net profit after tax should be going back to the shareholders.
Okay, a quick glance then at the numbers for the third quarter, which was then the first quarter that we have Sense Graphics in the figures. We had sales of just above 32 million Swedish crowns. That was an increase of 136% compared to the same period last year when Sense Graphics was not included. If we compare apples and apples, we still had an increase of 35% in the third quarter. And if we look at the two business areas, for this quarter, sales for industry OEM was just above 19%, and sales for educational products was just above 13%. So industry OEM was larger than than sales of educational products. That can, of course, vary between the quarters. We have different seasonal effects where educational products often have a very strong fourth quarter due to the fact that the university hospitals, etc., the customers often have that budget year, and they often wait until the end of the year to do their final investments. Industry OEM also has some seasonal effects, but not that strong. More over a longer period of time that Gisli talked about, that it can be more uneven over time, depending on where we are in different projects. For the full period, January through September, we had sales of just above 62 million. That was an increase of 57%. And if we then again look at comparable units, that was an increase of 19%. A lot of figures, small figures here, but if we focus on the third quarter, we had a gross margin of almost 87%. We have been before at around 75% and have also always explained that when we have a larger portion of license fees in sales, the gross margin will increase. And that's what we see here now for the third quarter with more sales within industry, more license fees, the gross margin goes up. Marketing and sales, approximately 30% of sales, also affected a bit by the acquisition, where we now have some extra amortizations due to the acquisition. And in the administrative costs for the quarter, we had approximately 1.5 million. That was because of the acquisition, one-off costs because of the acquisition. So we had an EBIT for the third quarter of 9.5 million and net result of 10 million. And as Gisli mentioned, our goal for the EBITDA margin is now 40%. For the third quarter, we had 43.5%, so we were above that goal. That can, of course, also vary between the quarters. We capitalized some of our expenditures, but not as much as we depreciate. We have a very good, we have no interest-bearing debts in the company, strong cash flow. We did that new share issue during the third quarter that I mentioned, and at the end of the third quarter, we had cash of just below 70 million Swedish crowns. Just a very quick look at the shareholder structure. We have two larger shareholders that have been with the company for 15 years. They were diluted now with the new share issue, but other than that, they have really kept their shares throughout these years. And then Landsnora Software, those are the sellers of Sensgraphics that now hold 10% in the joint company. Swedbank Robur is also one of our largest shareholders. They have been with us since the listing of the company 2.5 years ago. And then we have these new shareholders that came in with the new share issue. Okay, I feel we're running short of time, so we'll stop there.
Thank you all. So I will be just going through some quick questions. Could you just describe the revenue model a bit closer in terms of licenses and sort of system sales, and just so we can get a greater understanding of how your revenue streams actually, you mentioned a bit of a lumpiness in the OEM segment and some license fees, but could you just give us an overview of the new entity, how we should think about that?
Yeah, and it's quite different between the two business areas. Educational products, that's more one-off, the hardware and the software. You can add the new software modules and you can have upgrade and support as well. But it's most of the revenue comes when you buy that simulator. And then within Industry OEM, we have the first part of the project where we have consultancy fees when we do the adaptation of the software to the customer's platform, if it's a robotic platform or some other platform. Then you have the license fees, but they come then when they start to sell. So in between, you might have a period when they do their regulatory approval processes, etc., when we don't really have the revenue. So consultancy fees, then you have a period, and then you have the license fees. And when the license fees come, that's we get a license fee for each robot, for example, that is sold.
So, looking at the coming next 12 months, what should we look out for as investors? What's going on with the new entity structure that's been put together this in the end of the summer?
I think that what you should keep an eye on is the long game. I mean, it's the long term, and the most important things are the digitalization of healthcare, the increased focus on patient safety, and the transition from open surgery to minimum invasive surgery, both laparoscopic and robot assisted. And if you have those three mega trends in mind, that all are very good for our company, you will keep on seeing how Medtronic have launched a new robot, how the joint venture between Johnson & Johnson and Google, which is called Verb Surgical, is investing heavily in this area for also surgical robotics. How CMR Surgical, that's a client of ours, had the largest capital raise in Europe ever for a privately held medtech company. I mean, keep the mega trends in mind, and then look for the events that happen along those lines. That's what I would say.
Perfect. And just a really quick final question. If you could describe the competitive landscape and your position in that, in the competitive space at the moment.
Yeah, we have some competitors, but very few, because this is, remember, this is a niche market. It takes a very long time to develop the asset, I mean the software, and for the med device companies, it's still a smaller part of the cost of their product. So it's actually, in my mind, a real sweet spot. So it's us, Surgical Science. It's a company that's called Symbionics. It's an Israeli company that started roughly at the same time when we started. They are now part of 3D Systems. They were acquired, so they're part of a 3D printing company. And there's a company called CAE. That's CAE Healthcare. That's part of a flight simulation company, but that also do medical simulation. But I say it's primarily those three companies in this space. So it's basically a global niche market. So not a lot of competitors, but a few.
Perfect. Thank you very much.
Yeah.
Thank you all for listening. We'll
You're
cut it
welcome.
short there in the interest of time. Thank you.
Thanks.
Hello, and welcome to ABG Investor Days. My name is Olof Cederholm, and I'm an industrial analyst for ABG. We're very happy to have Swedish Sterling here with us today, represented by the CEO, Gunnar Larsson. Please hand over for you.
Thank you, Olof. Yes, I started this company when I was the CEO of Kockums, a naval shipyard here in Sweden. And that's where I came across the technology that I will talk about today, which is the Stirling engine technology within Kockums that has been used in submarines for more than 30 years. The first submarine with this technology was commissioned already in 1988. And what I discovered was that it turns out to be a very tricky problem to combine efficiency and high power in the Stirling engine. And Kockums was the only company that had solved that technical solution. And that is, of course, two very important parameters in order to build efficient energy systems. So I started the company by negotiating a license with Kockums that we signed in 2008. And that is a baseline for the company, and what we are doing is the Stirling engine technology, which is completely unique for our company. In 2015, we came across this application and problem in the smelting industry. And what we realized was that from the smelting industry, in all metal processes, there is a byproduct in terms of gas, off-furnace gas, in huge amounts that have been very difficult to utilize. And the way we came across it was that I met the guy on a ferrochrome smelter in South Africa that had a failing project with internal combustion engines. And eventually, we realized that the drawbacks with internal combustion engines that makes it very difficult to utilize this gas is not a problem at all for a Stirling engine because of the principle of the Stirling engine. So it was kind of an awakening when we saw this problem, and we realized that this can easily be solved with the Stirling engine. Looking on the amount of energy that comes out in this off-furnace gas, it's approximately 50% of all the energy that goes into the smelter ends up as chemical energy in these gases. And they are more or less being flared everywhere in the world today because there hasn't been any good technology to utilize that energy source. Actually, there is one better solution, and that is if you have the possibility to convert it to heat, which we do here in Sweden in many cases, and provide that heat as district heating. If that is possible, that's always going to be a better solution. But fortunate enough for us, that is not a solution for many markets in the world because there simply isn't any use of that heat. And that's where we come in. Looking on the total amount of gas that is being flared in the world today, it's kind of mind-blowing that if we could convert all that gas, we could actually supply the entire African continent with electricity. So it's a huge market of wasted energy that we think that we have a solution that can convert to energy and make use of it. A couple of highlights in the company. We introduced what we named the power block technology in 2017. We signed the first contract just 3 months after introduction with the ferrochrome smelter in South Africa, Afarak, Mohale, and we commissioned the first operational unit in May this year. So that has been operating now for roughly 6 months. In the beginning of this year, we had Lloyd's register verifying some of the most exceptional features with the technology. The first one, probably the most important, is that they put their certified stamp on the fact that we actually generate the lowest cost electricity in the world of all known technologies. and that was verified by Lloyd's. Number two of those verification was the fact that if you have €1 to spend in investment in any technology, our technology will yield a higher CO2 reduction in the atmosphere than any other technology, which actually is one of the reasons why I decided to start this company, was related to the environment. And we found a solution that actually makes a larger difference than any other technology. In July this year, we managed to sign the first major contract, the first agreement with Glencore, which is the largest raw material manufacturer in the world. And that project is now ongoing, and we expect around year-end this year to have all detailed agreements and technical definitions completed and to be signed off, and which will commence the construction of that project. Looking a little bit on the Stirling engine technology, I will not go much into detail, but just a few words. On the left here, you see the basic sketch of a Stirling engine, and it's actually quite a simple principle. And the whole principle is really to be able to convert thermal energy to mechanical energy in this engine. And essentially, it's 2 pistons and 2 cylinder volumes connected together with a concealed working gas. It's a gas that is not consumed in any way, that's only in that engine to convert energy. And by putting one of those cylinders in a cool environment and the other one in a hot environment, that machine can convert that thermal energy to mechanical energy put out on the crankshaft. And the nice thing about this, for this application, which makes it actually evident that we can make use of that energy, is the fact that the Stirling engine only need heat, and that heat is applied on the outside of the engine, and it doesn't really matter how you create that heat. We actually started out the company by illuminating the hot side of this engine with solar radiation and converted that thermal energy in that way. The first trial we did before we actually signed the first contract here was on a solar engine, that we actually demonstrated for the first customer that we could actually make use of that heat from that flaring process with our Stirling engine, and we got approximately the same performance as using solar radiation as the thermal source. So this is really the reason why it's such a good solution for this problem, because the difficulties with these gases are really extremely difficult to handle with an internal combustion engine, because it's a byproduct from the process, and the smelters will never control that relationship of different components in the gases, because it's a byproduct. They want to have a nice metal out of the smelter, and those variation doesn't make any difference really for the Stirling engine. As long as it burns, there will be heat that can heat the Stirling engine. So what we did is that we put a total of 14 of our Stirling engines into a standard 40-foot container. Each Stirling engine is 30 kilowatt, and the total power of this container is 400 kilowatts. And we also introduced all supporting systems into this container. So we have more or less a plug-and-play unit that can be connected to a smelter. So what we do, instead of flaring the gas on top of the smelter stack, we take that gas and then we actually flare it in several small flares just in front of the Stirling engine, inside a chamber that is essentially a flaring chamber to optimize the heat transfer into the power block and convert that energy to electricity. Then we feed that electricity back to the smelter. So we are actually saving electricity for the smelter. And that is a really important part in our business model, because by doing like that, we are actually completely independent on authorities or governmental regulations to put electricity out on a grid. We are simply reducing electricity consumption for a private entity. So in our sales process, the only thing we need to do is to convince a private entity to make an investment that will save them money. And that makes it much easier. And I would say that that is the main explanation why we could, in only 3 months, go from introduction of the product and actually sell it to a contract to a customer. That would be impossible with when you are dependent on governmental regulations. Looking at the container, it's a 400 kilowatt container. We make use of dissipated heat energy, and we produce electricity. That will also reduce the carbon emissions in exactly the same way as if you put a PV power plant or a wind power plant. That also make use of energy that happens to be there somewhere and turn that into electricity. The difference is that this power block will operate more or less 24/7 basis, 365 days a year. And that means that if you compare this with, for example, 400 kilowatt of PV, this will yield 4 times as much CO2 reductions. And the CO2 reductions, of course, comes out of the fact that in South Africa, 90% of the electricity originates from coal-based power. So I think this is something really worthwhile mentioning. If we look on the Glencore project that we are working on now alone, that project alone will actually compensate for almost 90,000 Swedish cars on the roads here in Sweden in terms of CO2 emissions. That's quite a mind-blowing thought that this can very quickly make an impact in that space. Looking on the cost, we had Lloyd's Register making this evaluation, comparing our cost to other sources of electricity, and we are almost half the cost compared to the closest competing technology. And of course, the reason for that is that the fuel is for free. That is an important part. We are using a waste product, and the capital utilization is very high. It's calculated on 94% availability over a year, and that is essentially where these smelters are running with their capacity factor. So that yields an electricity cost of 20 euro per megawatt hour. And we are completely independent of any kind of governmental subsidies or anything. It is simple financial cost saving for our customers that will sort of get this going, which I think is a very, very strong driving force in combination with the environmental effects that we achieve with the technology. We started out with the ferrochrome industry in South Africa, and as you can see here, we have mainly 2 big players, Samancor and Glencore, that dominate that market. And it's a market potential close to 300 million euro. We have a first project with Glencore. It's at their Lindberg facility, where we will build up to 25 power blocks, up to 10 megawatt of capacity. Looking only on, for example, Lion, the biggest smelter in the world in terms of ferrochrome, if we would install capacity to make use of all that gas, we would compensate for the whole domestic flight system in Sweden in terms of CO2, only for that smelter at Lion. And I think that is really an interesting comparison to make. Looking on the financials for our clients, they will get a payback if they buy the equipment of roughly 3.5 years, which probably is a little bit too short. Could probably be a little bit longer, but that's where we set the price to get into the market quickly. We could probably raise that price going forward. 5 years would probably be very good as well for the clients. A third of their total cost is electricity to the smelters. We have showed them that we can save 15 to 18% of that cost. So that translates to approximately 5 percentage units on their bottom line. And today they barely reach that level on the bottom line. So we talk about an investment with a payback of 3 to 5 years that will actually double their bottom line. So the financial driving forces here are very, very strong. The Glencore project, as I mentioned, 25 power blocks. This is done as an energy conversion service from our perspective, and that is simply to take away the technical risk from Glencore and enable this project in an early stage. So we will finance this project, and it will give us a yearly revenue of approximately 40 million Swedish crowns. It's an 8-year contract, but Glencore have a buyout option of the 5 year. We think that Glencore will actually use that option. It makes a lot of sense for them to buy the equipment themselves. The savings will simply be larger for them, and they have a very strong balance sheet. Looking a little bit more on the long-term potential, as I mentioned, we have started in South Africa on the ferrochrome market. That market is in the order of 300 million euro. The next step is obvious. That is going for the entire ferroalloy market. The gases from all the ferroalloy industry is very similar, so the product will be applicable for all those smelters without any modification. So that is the natural next step. There we are talking about the potential of 6,500 units, a market potential in terms of money of 3 billion euro. And of course, the next circle is sort of the dream circle, what can happen in the future. That is all the gas being flared today in the world. That would be equivalent to 50 billion euro. We will not reach the entire that market. There will be corners in that space where it doesn't make sense for different reasons, but a quite big portion of that market is a very good potential going forward in long term. But for the next 5 years, we will be fully occupied with the ferroalloy market. So that's something that is there in the future, that is a possibility for us to grow later on. Looking on the logistical side and the sourcing side, we have had a cooperation with the Scania heavy truck plant in Sibbhult in Skåne that we actually started already in 2008. And the whole idea was to take the military technology that we had on license with the Kockums and completely convert that to automotive industry space. And that is simply to be able to drive down cost quickly and have a much, much better sourcing capability. The more components you can move to standardized components from the automotive industry, the easier the sourcing will be. Because if you source standard components, there is a huge number of suppliers that can supply the same kind of components, and that creates a very competitive environment, which is very healthy for driving down costs. So what you see on the right there is the cost curve. It's a red line, and the blue line is where we set the price initially for our 2 first projects. We believe that we can actually increase that price going forward. then we probably talk about the price that is on the level 750 to 800. That's where they get roughly 5-year payback, as we talked about. But with the price we have now, we will break even for the Glencore project and start making a profit. But that cost reduction, that will actually continue for a long, long time. And as a rule of thumb, you can say that when you increase the volumes by a factor of 10, you will roughly halve the manufacturing cost. And that will continue quite a long time going forward. So there will be very, very good margins when the volumes go up. Finally, a few words on our IP strategy. When we are the first mover into a new market and a new application where no one else have been before. So about 1.5 years ago, we started a strategic work in finding out how can we protect this space for ourselves with a patent portfolio. And we did that not by looking on the actual inventions. We did that from a top level, looking on what do we need to make sure that no one else can enter this space for the duration of the patents. And that has produced a number of patents that we have in different stages. We filed the first patents last year. We will find the next patent before the year end this year, and there will be another 3-4 patents coming in next year. And with those in place, we think that we have a quite solid protection for the technology for this application going forward. So that actually concludes my presentation.
Perfect. Right on time. A few questions from our side. You mentioned that you're working through with Glencore on the technical details, etc. How should we think about timing with the Glencore contract? When will you start the actual deliveries, and how will that play out in the coming years?
Well, as I said, we think that we will have the full technical definition ready by year end, roughly, and signing all the final agreements on all the details in our relationship. And that will kick off the construction of the project. And then it will take about 12 months until we deliver the first units, and then we will build out the full capacity over the coming 16 months. But each unit will actually be commissioned as it arrives to site, and it will start making revenue. So it will be a gradual ramp up after 1 year, you could say. Then it will start ramp up.
Yeah. And recently, I think just a few days ago, you announced that you have formed a financing company in South Africa. Could you talk a little bit about that and how important that is for your activities there?
Yeah, we made the press release regarding a letter of intent that we signed with IDC, the Industrial Development Corporation in South Africa. And that is really to form a company that can finance projects. I mentioned that Glencore, they will most likely purchase equipment. So it's not that important for the Glencore side, but for Samancor we know, and they have half of that market, they don't like on-balance sheet solutions. So in order to be able to provide financing solutions, we need this company. And the whole idea of that company is to be a lease company that actually purchase the power blocks from Swedish Sterling and then lease out the power blocks on a time of use basis, to either directly to the clients or to an independent IPP that provides the conversion service to, for example, Samancor. We will actually use that solution also for the first project with Glencore. But going forward, we think we will sell to Glencore directly. So, of course, this is a huge enabler to be able to actually build the volumes forward. Because essentially now we have a financing solution that will work for Samancor, and we already have the tractions with Glencore. So this more or less opens up the whole South Africa market for us, and there is a very good probability that we will be able to penetrate the whole market.
Yeah. And one important thing will be to have a strong message that the technology works. I mean, it looks fantastic, but you've had one unit running since May with Afrac. Is that one unit enough for you to be able to say it works, or would you need sort of more operations with Glencore in order to come to that stage where it's sort of foolproof working?
I would say in terms of Glencore, they have already made their decision. They made that before we actually signed the contract in July, and of course that unit was something they actually reviewed and watched what we did in Afrac Mochale. But in terms of the technology working, we are past that stage. We know that the technology is working, so we are very confident with that. And maybe sharing a little bit more information than we have done earlier on that, we can say that the critical part for why existing installations haven't worked is that they can't handle hydrogen in that gas. And there is a substantial amount of hydrogen in the gas that normally lies in a percentage of 5 to 10%, where internal combustion engines stop working. They can't simply handle that content. We have actually operated that site without any problem up to almost 50% hydrogen content. And that sort of blow the whole industry's mind away when they saw how independent of that H2 content it actually is. That was not unexpected for us, because it's obvious if you understand the Stirling engine, but to be able to demonstrate and show that was, of course, gave us a lot of confidence as well.
Very good. With that, thank you very much for coming. Much appreciated.
Thank you very much. Thank you.
All right. Welcome back, everyone. My name is Jesper Birch-Jensen. I work as an analyst here at ABG. Next up, we have Funcom and CFO Stian Drageset, who's coming from Norway to present the company. So please go ahead, Stian.
Thank you, Jesper, and thank you all for attending. So this is a company presentation about Funcom. We are a video gaming company focusing on console and PC. Here you see an overview. We have a 26-year history. We have revenue-wise, roughly 50-50 from PC and console. We're listed on the Norwegian Stock Exchange. And as you see on the top right, we've had a very successful turnaround recently with a strong growth in revenue and profits. We are based in Norway, the headquarters. We have most of our developers there, almost as many in the US. And we also have an office in Lisboa, Portugal, where there's around 30 people. So in total, we're about 190 people. And most of these are developers focusing on making great games. And then on the bottom right, you see a snapshot of our portfolio. So Funcom has, as I said, a long history, and there was a big turnaround that started a few years ago. And here are some of the highlights of how the old strategy and the new strategy is different. So starting at the bottom with the core of the business, our internal PC games used to be a long development time of 3 to 7 years. Now we managed to reduce that to 1 to 2 years, so we can release more games. And we can also get them faster to market and make sure that we hit opportunities and adapt to the trends as they move quickly. We've also started developing more games in parallel internally. We've also added the console. That's a very efficient way to double the market, the addressable market, with a quite small increase in development costs. We've added external publishing. Previously, we only publish our internal games, but now we have third parties that develop the games and we publish them. That further generates further revenue streams and more releases. We have acquired IP, so intellectual property. We have strategic control over a broad IP portfolio, where Conan is the most well-known, also Mutant Year Zero, and a few other Swedish IPs, or IPs originating from Swedish board games. And at the top, we have some great new owners. We used to be held by, the largest owner used to be a shipping company. Now it is the world's largest gaming company, Tencent, which is the largest owner. And an investor that most of you know, Swedbank Robur, which is the biggest gaming investor perhaps in the Nordics, that we have as our second largest investor. And as many of you know, the gaming market is very strong. It's around 150 billion globally, and it's growing around 10% a year. And our space into this gaming market, where we like to compete, is where we avoid AAA competition, so niches that don't have an incumbent AAA player with a multi-million marketing budget. But at the same time, niches that are so difficult, for instance, due to multiplayer elements, that the indies aren't capable of competing. That's a sweet spot we aim for. And for instance, in open world survival games, which is our core niche, is a good example of that. And here you see a snapshot of our portfolio. We have a few IPs with several games: Conan, Secret World, which is internally developed, The Longest Journey, then Anarchy Online, and Mutant Year Zero on the end. And we're keeping on adding games to the portfolio. With a new strategy, we add a lot more games and more quickly than before, which increases the robustness of the strategy. Some of these games are quite old, so it just points out how long lifetime a good game can have. So Anarchy Online is actually now 19 years and still bringing in cash every month. And Conan Exiles here is our biggest game recently. That has been a key driver of the success the last couple of years. And that's an open world survival game where you are brought into a game and you need to survive, you need to craft weapons, clothing, and you need to explore and conquer and team up with others. That's a market niche that is has a lot of interest in the gaming market. So these are the IPs that we are very excited about. Conan, we have Solomon Kane, Mutant Chronicles, Cole. A few of these have had Hollywood films made by them that you see on those pictures. Dune is something we made a deal recently to make a few Dune games. There's a massive blockbuster coming to Hollywood in the end of next year. So that's something we're excited about. And we have our own internal IPs shown at the bottom. Yeah, so this is the big Hollywood blockbuster coming in December in 2020. So Legendary and Warner Brothers are taking Dune, which is one of the biggest science fiction series and had the TV series and films made a while ago, and really making a big push now. So they want to make this the Star Wars for grown-ups. Star Wars has gone more towards kids, and now they really make a big push to make this into a big IP with several things in the pipeline. There's this blockbuster film next year that's been announced, and it's and they're already starting to work towards a sequel. And there's a TV series called Dune: The Sisterhood that will be a streaming service. So all of this will generate attention to an IP which is already strong and has its core following in the gaming world. And we want to make the most out of this. And our next game that follows Conan Exiles, that has been our big success recent years, will be a Dune game. But it will build on the success of Exiles and take all the learnings and take the next step in that genre, and then leverage all the attention that will be around the Dune film. And we're also working on other exciting releases with the Dune game, and we'll announce those more later when we're ready. And then we're very happy and humbled to get the world's biggest gaming company as a large owner. They're top 10 market cap company in the world, so they have been clearly successful, and also it illustrates how big the gaming market is, as roughly half of their revenue originates from gaming. They have a very strong track record into investing into successful gaming companies. I'm sure you all know Fortnite, so they invested into the company behind Fortnite, which is called Epic. And they're good at spotting these trends early, so they invested in Epic early, and then they've been able to ride that wave. And other companies, Paradox, Ubisoft, Supercell, Frontier, and Miniclip are examples. And on some, they have a small minority share and kept it at that. And others, they've increased and have a high share, or in some companies, they also have full ownership. The actual transaction was that they acquired 29% of the share at a significant premium to the market price at 15.75 Norwegian kroner. So we're happy that they believed in us to put in such a bid. There was no cash into the company, as that was a pure market transaction where the old shipping owner sold their shares. And we see a lot of benefits to this partnership. They have a lot of industry expertise, and they also have a very strong reputation being a professional owner in the industry. So they never meddle with the operations, but if we invite them to discuss certain topics, they have a lot of great teams that they've already been very willing and helpful to bring to our company so we can discuss and so on. And that they have gaming evaluation teams, publishing, marketing, production, and so on. So there's a lot of competence that we can access and make sure that we can bring even better games to the market in the future. Obviously, they have a strong network, and it's easier for us to get attention with Tencent as a partner. Access to China, which is one of the biggest gaming markets in the world. And we also see this is investor validation. After Tencent went in, we've seen other institutional investors has invested and more interest from both retail and institutional investors. And of course, having a strong growth-oriented, financially strong backer is always helpful. So if you see big opportunities that require additional investing or additional gunpowder, we are in a completely different situation now than a couple of years ago. This is one transaction or small acquisition we did about a year ago. Small Portuguese office that we had worked with for a while. So then first we worked with them as outsourcing, and we outsourced work to them. They had a great mentality, a lot of talent, and made great contributions to our games. So we wanted to work with them permanently, and we also wanted to grow the team. So we made an acquisition of that, published or released or announced early this year. And we've already seen that we could follow the plan of doubling the team and saving the cost savings of having work done there versus in our Oslo or US office has already saved back the investment in that company. And then quickly on to financials. Here we see revenue and EBITDA, and you see 2017 and 18 has a strong pickup, and that is the result of the turnaround. The turnaround was initiated in 2015, but then it took a bit of time to execute, reshape the team, and get the first game out under the new strategy that was released in January 2017. And you also see EBITDA margins are very strong at 52% in 2018. And that's the favorable characteristic of the video game industry. Costs are to a large degree fixed, and then when the games are successful, then margins become high. On the left-hand side, it's a 12-month rolling revenue. In gaming, revenues vary by quarter by quarter due to uneven release activity. So 12-month rolling is interesting, and here we see that we're in a completely different level now than in 2016, when we have now margins around 50%. This is a picture illustrating the cash flow and investments. And we've come a very long way from 2016, where we had a lot of debt and no cash. Now that's turned around. We have a nice cash position and 0 debt. So we're much better shape to continue the growth into the future. And the sign of the investment into that future and that growth is on the right-hand side, where we see we've remarkably speeded up the investments into new games. And now on to the games and the pipeline. This is activity during the third quarter, where there about 7 games were worked on in some form. So these are the old MMO games. That's massively multiplayer online games, where thousands of players can be online in the same world. And these other are new releases where we made minor changes. So we added Switch to the park. On Mutant Year Zero, we added the DLC, that's downloadable contents. It's a way to add an expansion, and then we get some cash for that. And on top, there was a Conan Unconquered that was tweaked and relaunched with some new additional contents also. And this is the biggest game, Conan Exiles, which proves to be a very successful implementation of what is called games as a service. So it's a premium game in the sense that we sell it first for $40 to $60, depending on platform and region. But then we add a lot of content on an ongoing basis. So we had 5 DLCs during 2019. And one of them is actually launching today. That's the one on the right, where we add mounts, or the ability to ride on a horse and also fight on a horse. That's something the players has been wanting for a long time. It's a big community. The game has been sold to millions of people. And we engage with them a lot. They want new features and so on. And one of the features that have been very strongly desired is the ability to ride. And now that is released today. So we hope that will make the players even more engaged for the next months. This is another game we released recently, Moons of Madness. It was positively received. It's a bit of a horror game that was released around Halloween. It had 75% positive reviews on Steam. Now it's even gone up to 76. We released it first on PC, and then in January we will have it on console also. So we're looking forward to that release in a bit more quiet period. And then this is the new Dune game, the open world game, which will launch and benefit from the movie that will launch in December next year. On Conan Exiles, even though it's been very successful for Funcom as a company, it was made in a time where the company was struggling financially. So we really had to rush and get the game out quickly because we didn't have funding to do a thorough job and do the proper kind of ground structure. So it was a bit rushed, but still very successful. But it does kind of make it a bit more work each time we make a DLC or an expansion now. But with this game, we're going to do it properly. We've learned a lot from Exiles, and we have talked a lot with the community and got a lot of feedback, and we want to really get it right this time. And with the additional boost of the IP, we are really excited about that opportunity. And a bit more about this genre, open world survival genre. Here you see on the left, this is the concurrent uses of Conan Exiles, and this is of 2 other games, Ark and Rust, in that genre. So even though Exiles has been very successful for Funcom, and has made us able to turn around the company and be very profitable, we see both, or in the niche, the way it is today, there's a lot more room to growth. So the next release in this niche, the Dune game, we hope to be significantly better than Exiles. And also there's potential for the niche, for the genre to have a significant step up. Because today, even though there's a lot of excitement about this genre, all the games are a bit clunky. No one has really managed to get the right recipe. And that's what we want to with our next game. And fixing it, making it a bit more easy for new players. Now it's a bit difficult. It's a bit of a learning curve to get into the games. So a few of these things and balance the games even better will make this more appealing for the mass market. And that's when the genre can really explode and make it into the big, make it into a breakout success. We also see those genres that has really made that step. For instance, the Battle Royale, which has 1 billion users. They come from they don't come out of anywhere. There's typically a genre that is popular, but it hasn't quite figured out how to make the games more, increase the mass market appeal, take down the barriers to entry, and make the player experience a bit more smooth. So with our next game, we want to do all we can to make this more mass market appeal and get even broader appeal, and both for the game itself, and we believe there's a good chance that will also happen for the genre. That's also when we see Tencent coming in, they are very eager to get the next big success, and they try to find those market genres that have the opportunity to be the next breakout genre. And then they've seen this as one of those genres that has that potential. This is the co-op shooter that our US office is working on. It's on the Mutant Chronicles IP, which is one of the IPs that we control in the joint operation. That's another exciting multiplayer genre that has taken it's a bit further has a bit further mass market appeal already, and has the potential to grow even further, that genre as well. We'll get back to this game when we're ready to announce more about release and so on. And these are other games we have in the portfolio. Conan Chop Chop is releasing early next year. The same is the console version of Moons of Madness. And on the right-hand side are 2 publishing games we haven't revealed as of yet. Games Farm is the developer of one of them, and at the bottom is The Outsiders. That's a Swedish company. And we announced quite recently that we work with them, but we had worked a bit with them in advance. And they are really working at full speed. And delivering great builds every week. So that might release sooner than most people expect. We're running out of time, so I'll speed up a little bit. Yeah, this is the last slide. Summary and outlook. We have great financials, broadening portfolio of games, some strong IPs, and now happy with the new large owner in Tencent. So we think we are in a great shape to continue the growth, and we hope you will join us on this journey. And then we are ready for Q&A.
Thank you, Stian. Like you mentioned, we're running short on time, but I'd like to ask you, there's a big shakeup in terms of distribution for PC and console games going on with new platforms entirely, like Google Stadia and other cloud gaming solutions. What's your approach to those platforms? Are you rushing there? Are they requesting your content, or how are you approaching it?
Yeah, the gaming market is constantly evolving, and being able to adapt is very important. And the way we see this, it's called a store war in the industry, that all the different platforms, they compete to get attention and to get content. That is a beneficial kind of war for us, because that means they need content, we produce content, and they come to us with good offers. So we see that as an opportunity to de-risk the launch of our games, because we are able, by putting a game onto one of these platforms for free, if it's included in a subscription service, we can get a nice sum of cash, and then get a big part of the development cost covered, while still keeping the upside in that we also sell it directly. And perhaps it's the industry is moving a bit towards more not necessarily pure free-to-play model, but that there's a cost to buy the game, but there's more and more additional monetization later with the downloadable contents, for instance, but it also can be microtransactions.
Okay, I think we're out of time, but thank you, Stian, for presenting Funcom.
Thank you.
So good afternoon and welcome to the ABG Sundal Collier Investor Days here at Haymarket. My name is Rickard Krantz. I am a healthcare analyst at ABG Sundal Collier, and I'm very happy to present Biovica here today. I will be holding a short Q&A presentation afterwards, so I'll be asking some questions, but I will leave the word over to Anders Rylander, the CEO of Biovica. The floor is yours. Thank you.
Thank you, Rickard. And hello, everyone. My name is Anders Rylander, and I am the CEO and also the largest shareholder of Biovica. My background is within management consulting and entrepreneurship. So 10 years ago, I came in contact with Biovica as an investor. And I had to ask myself this question, which I guess some of you are considering today as well. Why invest in Biovica? And for me, it was the great value potential that the company and its product can bring for the cancer patients in the world, and also for society that finances these treatments. And let me use this patient with metastatic breast cancer as an example. A patient with metastatic breast cancer has about 3 years in median survival. And during that course of time, she will go through a number of cancer treatments with severe side effects. And far from all treatments are effective, and far from all patients respond to these treatments. So if she can get a better treatment, the opportunity to live a long life and avoid unnecessary side effects will increase. And this is the area where Biovica is focused in to through our product, offer more personalized treatment within the cancer area for better outcome for the patients, and also a more cost-efficient treatment for society. And so that was the reason I invested once upon a time, and I think also there has been more than me that saw the value of this and identified this as an unmet need, especially some of the leading oncologists in the world who has confirmed that this is an unmet need we can fill. And also we've done a lot of collaborations together with them in clinical trials that has generated results and data that proves the performance and the value of the product. So that's definitely another reason for investing in Biovica. And then it's the commercial side. There's great potential also commercially. 6 billion Swedish kronor is for the first application of many potential applications. And we've chosen as metastatic breast cancer and monitoring of treatments within that area. We're also in a very exciting phase currently, as we are about 6 months from submitting our FDA submission in order to get approval, and then our sales within the clinical area can start at the biggest market in US. So the reason for investing for me has been value for patient, value for society, and I'm also convinced that will lead to shareholder value in the end. And also, if you want to dig into this, I can recommend going to our homepage and look under Investors Relations and Analytics, where we have more details about the value potential of the company. And today I'll go through these areas more in depth: the need for the product, our solution, the scientific evidence we have created in collaboration with some of the world-leading key opinion leaders and oncologists, the market, and our go-to-market plan. And to start with the need, as I was saying, today a very positive thing for the patients is the number of different treatment options that exist. That has improved survival for in this case, breast cancer patients. But it also creates a challenge, because with many treatment options, all patients doesn't respond to all treatments, and over time, patients develop resistance against the treatment. You need to identify that as early as possible so you can switch to an efficient treatment. And then, of course, the treatment costs and side effects. Cancer treatment within metastatic breast cancer can cost more than $10,000 per patient a month. So there's an economic aspect also to use the money wisely and the side effects are often severe. So in order to accept the side effect, you want efficiency from the treatment as well. And what Biovica can offer is a quicker way of getting feedback of the efficiency of the treatment compared to the methods that are being used today. And I'll come back to that later. And the way we do it is with our product called Divitum. Divitum stands for dividing tumor. And so that gives an indication of what we're doing. We are measuring the cell proliferation rate, as the doctor said, or cell division. And as you all know, cancer is defined as uncontrolled cell division. We can provide some very important information through our assay or our test. And the way we do it, we use a blood sample from the patient, and we get a measurement of how quickly the cancer grows, how aggressive that is, and also when a treatment is working the way it should of course reduce the growth rate. And we've implemented this product on a standard platform called an ELISA platform, so it will be easy to implement it in the different labs around the world. And the product is currently CE marked and, of course, patented in a number of countries. So we have strong patent protection. The company behind this, Biovica, is based in Uppsala, and the product spans from research at Uppsala University, where we have our production facility, our R&D, and our lab, and it's all controlled and certified under the ISO processes within this area. And here's a schematic picture of how it works. The current method being used, the golden standard, so to speak, to evaluate treatment efficiency within this area is image diagnostics. You take a picture, an image of the tumor or tumors, if it's metastatic breast cancer, before treatment, and you take a new picture 3-4 months later, and you compare the size, and you draw a conclusion from that. What we do with Divitum is from a blood sample, we can measure the growth rate that will then become an increase in volume. So we get a prognostic measure, and we have in clinical trials shown that already after 2 weeks, we can see significant reduction from before and 2 weeks into a treatment within the breast cancer area. So a quicker and a simpler feedback on treatment efficiency. And these are an example of different diagnostic methods being used. Imaging, as I mentioned, being the gold standard currently. Another area is biopsies. When you take a sample of the tumor through a thin needle and you analyze that sample. And from that you can measure similar data as ours, proliferation, how fast the tumor growth is. But of course, with a needle, it's difficult to monitor the patient over time, and also if it's a metastatic cancer, this becomes a problem. So we offer another simpler solution compared to biopsies. And when it comes to blood-based markers, currently there are no really gold standard, no marker that has taken this area. So there's an opportunity for us to take that position. And here's some examples of blood-based markers being used, but has not established themselves as a gold standard, as I said. And also Ki67, that's the name of the current biopsy biomarker that's used for measuring proliferation, not being used frequently in the metastatic setting for monitoring treatment efficiency. There are also thymidine kinase, the same enzyme that we are measuring, that has been used for several years. The one on the market is currently being used for blood malignancies. With the data that we are providing, we are creating a unique niche where there's also a demand for these kind of treatment follow-up. And maybe the most important piece of commercializing a product like this is to generate data with leading key opinion leader, in this case oncologists. That will be the foundation for the entire commercialization process. that will be used for regulatory approval, for reimbursement, and for generating demand for the product. So far, we have been able to publish 17 clinical trials together with oncologists in peer-reviewed journals that proves the value of the product. We've done that within several areas, within breast cancer, lung cancer, gastrointestinal, and also blood malignancies. In total, it's more than 2,500 patients, so we have a solid foundation. And if you summarize the results, we proven to be prognostic, that is before start of treatment. We can make a prognosis on the outcome for the patient, and monitoring, that is during treatment, giving early feedback on how effective the treatment is. But our focus area is breast cancer, as I said, and so this slide summarizes the results within breast cancer. And as you can see, our focus has been within metastatic breast cancer. That's where we're working with our FDA submission and will enter the market. And that is where you have the problem of following the patient over time, monitoring the treatment effects. And within the breast cancer area, we now have performed more than 10 trials, most of them in the metastatic setting, but we also have in earlier phase. And just recently, we presented news regarding our second trial within local cancer. That is when you have diagnosed the patient with cancer, it's also important to understand the risk in order to make decisions about how aggressive treatment you put the patient on. So that's another opportunity for the future, but first we're focused on the metastatic setting. And as you see, some of these collaboration parties are some of the leading ones within this business. One can mention, for instance, in the US, Johns Hopkins, which is one of the more famous and well-recognized institutes in the US with almost 30 Nobel Prizes. The SWOG research group, which has a fantastic trial with over 400 patients, that will be the basis for our FDA application. We also have collaborations in Europe. We started out with the Karolinska. We're now in our third trial together with the Karolinska Institute, but we also are working with two groups that spans all over Europe, ABGSC and BIG, which gives us a good reach also on the European market. And behind these trials and these institutes are the key opinion leaders. These are the leading oncologists that sits on top of these different organizations that publishes guidelines, which is so important for us to get included into. One can mention a few, maybe Dan Hayes being the former ex-president of ASCO, which is the world's greatest cancer conference, but also publishes guidelines for treatment within breast cancer. Together with him and his colleagues at the SWOG team, we're doing this SWOG trial, which I refer to, which will be the basis for our FDA approval. Matthew Götz is another example, works at the Mayo Clinic, also involved in both the guideline, have been writing guidelines for ASCO and for NCCN within breast cancer, our focus area. So that's, and we have similar examples on the European side, both with European oncologists like Angela De Leo, who is on the executive committees of both IBCSG, which and the big breast cancer group, which I mentioned, and also ESMO being the and overall covering all cancer areas, not only breast cancer. In Sweden, we work with Jonas Berg, the former chairman of the Swedish breast cancer oncology group. So reaching out to these oncologists that can give even further impact with the results that we get together, and which will be the keynote speakers on the conferences. Generating demand for the product is really important to us. Talking about the market, if you look at it as this cube, our focus area is the combination of breast cancer, metastatic in US and Europe. That combination, that corner, is about 450,000 patients. That is about 1% of all people living with cancer today, based on the Global Can statistic that was presented a year ago. So there is a lot of potential to grow. The way we've estimated this is that we have done a market research on these markets. We've asked oncologists to confirm the demand for the product, which they did, and also around treatment schedule, how would they use and what frequency, how often would they use the test. We also asked payers for price willingness. What would you could you accept to pay for this kind of product? And that ended up in the 6 billion per year figure. So it's based on market research. And that's the first. I talked earlier about our results within early breast cancer, so there's definitely an opportunity to expand to earlier phases. We also have results within lung cancer and gastrointestinal cancer being one of two of the larger areas, and of course geographic expansion. So in all dimensions, but we are focused in getting to the market in one specific area first, and then expand from there. We have the research market, where companies are using, primarily pharmaceutical companies, are using it in clinical trials and in development of new drugs. So of course you're interested in getting feedback on efficiency already in that process. And the steps in order to get this to the market, to generate demand and sales. Of course, you have to develop product, but when you develop a product, it's important that you already from the start have the FDA requirements in mind. So that's what we've been doing for a long time, and we have a version now which we will meet the requirements set out by the FDA. In parallel with that, we have documented the product in these clinical trials, and that will be used then in the next step, the regulatory pathway, where we put our focus and effort into the FDA track, because that's the one with the highest requirements and demand, and then we can reuse that data on other markets going forward. And but that's not enough. You need to get into the reimbursement systems so you get paid. So the clinical data that we generate will also be used for reimbursement. And the last step that we believe is important before entering the market is to establish a commercial partnership so we can benefit from an already existing sales channel to reach out to the patients on these key markets. And we're looking into both collaborations with labs, which will be our customers selling it to the different hospitals, but also diagnostics companies where we can complement their current assortment. Upcoming milestones to look out for is that we've said that we will submit our FDA application by mid next year, 2020. So we're in the middle of doing that work. We have completed, or we're in the first phase, which is called analytical validation, where you technically prove the performance of the product, and we've done 2/3 of that. So we already now see that we are meeting the requirements we've set up. And the next step is the clinical part of the FDA approval, the clinical validation, and we just received the samples from our collaboration partners. We now have them in-house and can soon start working on the clinical validation as well. After we submitted the FDA submission, we expect to get approval from the FDA before end of 2020. And then the next important step is to, during the next year, after that, during 2021, get the first reimbursement in the US and then expand from that. So by early 2021, we have a product which can be sold out-of-pocket sale, and then later that year, a reimbursed product. So is there no risks in this project? Yeah, well, of course, there's still some risks, but we have been working proactively for many years to mitigate those risks, and the further we come, the more data we generate. We have reduced risks in many areas. Of course, product development, when we have a developed product and we have come quite far through validation, I would say that we've reduced that risk. Same thing with the clinical side, when we now have published a lot of clinical trials with positive results, and we have key opinion leaders supporting the collaboration. Regulatory pathway, we have had numerous discussions with the FDA for several years, so we believe we have both educated the FDA and we've understood what they expect from us. Reimbursement, we've done market research and we've done a pre-study within this area, so we are working on that as well. And same thing with commercial partnering. Basically, that's dependent on having all the other pieces in place. Also like to mention board of directors. We have a really strong team with the board of directors. Lars Holmqvist being the chairman, has a long experience within this business, being the CEO for Daco. That was a turnaround case, you could say, and then later was sold to Agilent. So that's a fantastic success story, and he has brings great experience from that. Maria Holmlund, also many years within Fadia, Thermo Fisher, and similar diagnostics company on the market side, bringing new products to the market. And Ulf Junelius, an example of, he has the pharmaceutical and oncology side, being an oncologist working for the pharmaceutical industry, developing several blockbuster drugs within oncology. So we have competence from the business that has done this before, which is a great support. So finally, to summarize it, I think we have a very interesting product that can add great value both to patients and payer. And we are in an interesting phase where we're in the middle of the clinical validation, and we have generated data that proves the value of the product, and we are about to submit our FDA application during next year. So that's a very significant milestone for us to get to the clinical and commercial market. Thank you very much.
Thank you, Anders. I'll proceed with some questions. So Divitum has been CE marked for some years now. How has the sales in Europe progressed so far, and what's the strategy to sort of expand sales going forward?
We start with the sales. So far, our sales has been research sales. So it has been some of the major pharmaceutical companies that, based on our clinical results, have gotten interest and used that for the development of their own new cancer drugs. So we haven't really been using the CE marking. CE marking is one of many factors to generate sales. You need as I had in one slide, you need the reimbursement and you need a solid data from clinical trials to generate demand. That's what we're generating. And our initial focus area is US. So you can expect us to enter the market in US, develop output sale and reimbursement, and then Europe as a second priority. There's a reason for that as well, because we believe US is a bigger market, worth taking the investment, and you will enter the market on a higher price level. But Europe is second priority, and we have identified in our market research a couple of countries that will be our first tier.
So you recently announced you adjusted the timetable for the 510K FDA submission, which is now set for mid-2020. So you wanted to include the major...
the SWOG trial.
The SWOG trial, exactly.
Yeah, so we got an opportunity to base our application on that, which we now are basing the process and the time plan on. And that's a great opportunity. That's not that many trials of that available. It's retrospectively, so we can use old samples. So you can see you could gain 5 years compared if you could done it prospectively, and you don't have to pay for the enormous costs. So it's a great opportunity, and the SWOG network in itself, I think it comprises of over 12,000 oncologists and several hundred hospitals. So it's a great way also to reach out to them and being our first customers and so on. So yeah, we see that as an opportunity. Unfortunately, we get access to the samples now.
Just as a final question, so the first indication you will go for monitoring. So if you gain a 510K FDA sort of get through there, how difficult would it be to add a prognostic indication as well, where you using in a prognostic setting?
That's a good question. In this was done in discussion with the FDA. We concluded we will start with the monitoring claim, and because for several reasons we reduce risk, not doing everything at once. And the monitoring claim is the commercially most important for us because you follow the patient over time. To add, it could be the prognostic claim, as you mentioned. It could be other treatment. You could want to expand the intended use, and that would be a supplement process that will be much easier than the original that we're doing now, because you can reuse this. I'll talk briefly about analytical validation. We invested many hours and performed thousands of tests in several batches of the product to prove the performance. Once you've done that, it's done, and you can reuse that in your supplement. So yeah, it's easier. Of course, you need clinical data, of course, but with our collaborators and so on, I think that's an edge that we have that we could already now actually submit for prognostic claim if you wanted to. But in discussion with the FDA and also our commercial potential, this has been chosen to be the strategy.
So it's a slightly easier process then. So
we'll see. And it's risk reduction,
Yeah.
not doing everything at once and then fail on one thing, failing the entire project.
So I want to thank Anders, and thank you all for listening, and have a good afternoon. Thank you.
So, we have a presentation today with, let me see now, Tethys Oil.
Tethys Oil, yes.
Tethys Oil, yes. Magnus Nordin, CEO of the company. My name is Gisli, Lindberg, responsible for ABG Research. So the floor is yours.
Thank you very much. Okay, ladies and gentlemen, delighted to be here to talk about Tethys. I hope we have some interesting things to talk about. We do consider ourselves an interesting investment case, although we have been around for now a good 15 years in the public environment. This is a photograph from our operations in southern Oman, where we recently conducted a seismic survey in the Rub al Khali basin, not too far away from the border of Saudi Arabia. And we have a nice oasis in the background and the Chinese-operated seismic trucks in the foreground. But let's start from the beginning. We've been around since 2004 in the public environment, and since 2010 we have produced more than 27 million barrels of oil net to Tethys, which has yielded us substantial income, and we have actually distributed more than $80 million to our shareholders since that time, and which is more than we have raised in our IPO a long time ago. And things are going quite well. We reported record production from our main license in Oman during October. We have had very good reserve replacement ratios, which is a key indicator for an oil company. I mean, obviously you produce your oil and you make your money that way, but if you are out of reserves, you cease to exist. So what you of course strive to do is to find more oil every year than you actually produce. And in 2018, we replaced 177% of our production. So we are a continued growth case, and we left 2018 with 25.4 million barrels of oil in reserves, which is almost as much as we have produced over the last 10 years. We have a number of projects ongoing, and we collected several thousand square kilometers of new 3D seismic in several blocks. And we have recently added 20% stake in Block 56, also in the southern part of Oman. We are listed on Nasdaq Stockholm, mid-cap segment, trading around 75 crowns per share. That gives us a market cap of about 2.7 billion crowns, or around $275 million. Strong balance sheet, and no long-term debt, and a net cash position as at 30th September of $71.9 million. Good liquidity, important for an investor. 240,000 shares per day, which actually gives a full turnover of the entire share stock in about 2.5 times a year. 36 million shares outstanding. Of those, Tethys owns close to 2 million shares. As I mentioned, strong balance sheet. We have shareholders' equity of $273 million, but more importantly, we have had a strong cash position for the last couple of years, and as of 30th of June, almost $72 million worth of cash, which is actually 750 million crowns. Oof. The cash comes from our production, which has been reasonably stable, just over 4 million barrels for 2016, 17 and 18. And so far this year, we have produced 3.4 million barrels. And we're actually looking at record production for the third quarter and record production for the month of October. So we expect the full year production to be higher than it was earlier in the previous years. Revenue, very oil price dependent. So far this year, we have sold oil for about $114 million, just over 1.1 billion crowns. EBITDA, the cash flow, that's what we actually get after our costs, In 2018, we generated just over $100 million, and so far, for the first 9 months, we did just over $70 million. And as you can see, there is a strong correlation between revenue and EBITDA to the oil price. So at $70 oil last year, we netted just over 100, whereas at $50 oil the year before, we only got to 80, which is not bad. So with increased production and an average price so far this year of 74, we are looking at a very healthy cash flow generation. As I mentioned, reserves, and in particular the replacement of reserves, i.e. that you find more oil than you produce, is one of the most important key indicators for an oil company. And we have actually never found less oil than we produced since we started production in 2010. On average, we have found about 150% of production. And obviously we are keen to see what we can achieve for 2019, given that we had a very good year in 2018 with 177%. We have a very limited geographical focus when it comes to our assets. We are focused on the Sultanate of Oman, where we now have interests in 4 different licenses. One is a combined license over 2 blocks 3 and 4, where we have a 30% share. That's where we have our production, and that's where we have our reserves. We have one exploration block, Block 49, that we have 100% interest. We've had the block since 2017, and after completing initial geological and geophysical studies, we conducted a seismic campaign earlier this year, where you've seen a picture from, and we are now in a position where we're getting ready to drill our first well on that block. And we have just acquired 20% in Block 56, a little bit south of 3 and 4 over here, and in parallel with Block 49. It's a block that we find quite interesting. We don't operate it, but we see a strong potential, and in particular we see strong synergies geologically with what we've done in Blocks 3 and 4. Oman in general is a very good place to be. It's very much part of the Middle Eastern oil fairway. As you can see, we have oil all the way here from southern Turkey through Iran, Iraq, Persian Gulf, Saudi Arabia, of course, the world's largest oil field here, the Khawar field, Abu Dhabi, United Emirates, and the oil continues into Oman. And our areas are here, here, and here. Oman is a friendly and efficient country. We have strong support from the oil ministry. Infrastructure is excellent, with a large pipeline capacity, and all oil field-related services are readily available. Oman produces just over 1 million barrels of oil per day, just under Norway's production. And there are similarities with Sweden. Small population, sparsely populated, and surface-wise, it's about 2/3 of Sweden. And I should mention that our combined license interest is actually close to 15% of the entire Omani landmass, which actually puts us in 2nd or 3rd place when it comes to license holders. We are about number 6, 7 when it comes to production. Just a quick reminder, it is a geological exercise we're dealing with. We want to find a set of sedimentary rocks where you have a rich organic shale, a very porous sandstone or carbonate, and then a thick, impenetrable shale on top where the oil stays. And that's what the seismic exercises are all about. You want to get a map of what it looks like underneath the surface. And as such, you send down, or you have these trucks stand on their feet and vibrate like this to create a wave that goes down into the ground. And as it's reflected from various layers of rock, you get a picture of where you could have an oil or gas trap. And that's really the starting point for all the oil we are looking for and that we also have produced. All our oil fields look schematically like this, and then they are different size and different composition. But this is the seismic mark that we are looking for. Block 3 and 4 is our oldest blocks. We've had them since 2007, been in production since 2010. License is valid until 2040. 49, we signed in 2017. We've had it for just over 2 years. We have an initial 3 years to drill a first well, and then we can elect to continue, keep the block for another 3 years, or if we find something, we can turn it into a production license that would in that case be valid for up to 20 years. Block 56 has been around since 2014, and we recently acquired a 20% interest. We are looking at an exploration period that will be extended to 2023, and then we'll see if we have a commercial discovery or not. 3 and 4 shows a rather complex geology of a number of reasonably small oil fields. All the green stuff here are producing fields. This cluster here we found over the last couple of years. The Farah South field was discovered or put in production in 2010, the Shahad field in 2012. But more importantly is that we are expanding. The blue boxes here shows where we have 3D seismic coverage. And we are expanding that to cover virtually all of Block 3 and a large part of Block 4. And we have a number of potential oil fields already identified as leads and prospects that we are going to drill over the next couple of years. So for as much as we have already produced more than 7 million barrels net to Tethys, we have remaining reserves of 26 million barrels. We still have a large potential left that we will start to drill over the next couple of years. Block 49 is a earlier story. It's somewhat in the same position that blocks 3 and 4 were when we entered them in 2007. Several wells have been drilled by previous operators. All of them had, or I should say actually most of them, had encountered oil in some fashion, but no one was sufficiently interesting to be commercial. So after having conducted a review of all previous wells, and looked at where it's most likely that oil has been generated in sufficient quantities based on the well data. We have conducted 2 seismic campaigns, one 2D and one 3D, over what we consider so far the most interesting area. And that's where we are now, have matured a prospect. So we have a potential oil field identified, and we are now in preparation to drill that in the first half of next year. If it's a discovery, we'll appraise it, get it in production as quickly as possible, and keep the license for a good 20 years. If it's not a discovery, depending on the results, we'll see if we do more work here or if we concentrate somewhere else. Block 56 is closer to the ocean and south of blocks 3 and 4. Also a rather interesting exploration block, 11 wells drilled here, all but 1 have encountered oil. We are going to do some fairly interesting work more or less immediately, and over the next couple of months test 2 or 3 of these wells that have been drilled by previous operators to try and establish flows and show that they are viable petroleum systems. Several of the plays and the geology that we have here is very similar to blocks 3 and 4, where incidentally no oil had been produced before Tethys got involved with that block in 2007, 2008 either. So we believe that we are on to 2 very interesting blocks in 49 and 56, where we can add a lot of valuable knowledge that we have acquired over the 10 years we've been working in Oman. So to sum up, we do believe that we are an interesting investment case. If you want exposure to oil price, if you want to have a good cash flow generating stock that has paid out large dividends to shareholders over the last 3-4 years, and with a strong organic growth potential from existing licenses. We believe that we can offer everything to everyone, really. Dividends, organic growth, and exposure to the oil price. And then, of course, the question is, does one want to have exposure to the oil price? Is it going to, are we going to continue to use oil? Will there still be consumers that will pay for oil? I mean, that's in effect the business we are in. We provide energy to consumers, and as long as there is demand, we will continue to produce oil. So let's touch on the oil price a little bit. First, and also from an investment perspective, oil prices have historically been difficult to predict, and they have fluctuated. We have a sharp drop here in 2008 with the financial crisis, and here in 2014, when there was a production war between Saudi Arabia and American shale, which stabilized with a truce in 2016, and we've since then been hovering plus minus $60 per barrel. Is this sustainable? Will prices continue? Will oil still be needed? And this is a rather important slide to explain why I do think oil will still be needed. This is the decline rate for mature oil fields. So the production we have today declines by more than 5% a year, which means just to satisfy current demand, we have to find 5% of a yearly production every year. And on top of that, since the 80s, we've had an annual growth rate of about 1.5% every single year. And that's important to remember when we discuss whether oil will be needed in the future. We talk about alternatives, and yet those alternatives have not even been able to stop oil from increasing in use, while at the same time existing fields decline by 5% a year. And if we look at the alternatives to fossil fuels, is this little green wedge down here. So it's a rather massive challenge. This includes coal and others also, but the renewable side has a long way to go until it really becomes an alternative. Today we consume 35 billion barrels each year, and that's an enormous amount of oil. That is probably not sustainable in the long run. The Johan Sverdrup field, Norway's largest discovery in 20 years, known also from Swedish company Lundin Oil, is a discovery of about 3 billion barrels. That's 10% of consumption. It covers 2 years of declining fields. So when we see this curve here, an oil price that's hovered between 50 and 80 for the last couple of years, I do think we are going to see a strong dependence of oil for the foreseeable future. And anything that we can do to substitute here is badly needed. I mean, obviously 35 billion barrels is an enormous amount of oil that we consume, and it's not a good idea to change the composition of the atmosphere. So we have a challenge here for all of society that we as an oil company will assist as best we can. But our job here is to provide energy, oil, as long as that's needed, and our challenge is to do that in as an environmentally friendly and cost-efficient way as we can. And I believe Tethys can offer such an investment case, and I believe we will be doing that for some time to come with expansion in Oman and continued distributing cash back to our shareholders. Thank you very much.
Thank you. An applause before the questions. That's the first time today. So we will get another one soon. Thank you very much. Before we start with the more detailed questions on you, I think we have just look a bit higher up now and see a little bit about the geopolitical situation we have currently in the world. We know about the China-US trade war discussion currently. We also know that Iran has been an issue, and I don't think that many here have a full understanding of Oman. Is this something you should be aware of risk-wise, that it's a safe harbor in that segment of the world, or yeah?
Okay, arguably I'd say that Oman is the most stable country within the entire Middle East, North Africa region. Small population, per capita income around $15,000, and no massive youth unemployment problems or massive open unemployment in general. Oman has traditionally, foreign policy-wise, been like Sweden, neutral, the Switzerland of the Persian Gulf. Good relations with Oman, with Iran, decent relations with Saudi Arabia, very good relationships with the USA, and a constant advocate for measured and negotiated solutions to the problems of the region. Oman, together with Sweden, is highly involved in the peace discussions in Yemen between Saudi Arabia and the Houthi separatists. Oman has a strong profile with the United States and has been used both by the United States and the United Kingdom to communicate with Iran. So the country is very well plugged into the international scene and with very good relationships to the powers that matter, I would argue.
Thank you. And if you then look into your own company, we talked a little bit about block 3 and 4 that is going very well, that is conclusion. You see a lot of prospects. When it comes to production as it is currently, how much higher do you think you can go over the coming years?
Okay, we've guided for the current year between 12 and 13,000 barrels per day. We are currently, the last month was about over 13, but year to date, I think it's around 12,700. And obviously we haven't changed our guidance, so we expect to come in somewhere in the higher end of the guidance between 12 and 13. And we haven't said anything about next year. It's dependent on next year's work program that won't be decided until later in December. So it's difficult for me to say, but given the growth potential we have, albeit that some of the older fields are in decline, we look optimistically on the future. But we should be able to be much more precise in just over a month when we could guide for 2020.
Okay. And as you said, you mentioned you have several interesting prospects in Oman and other blocks, but you have a strong cash position. I generate a lot of cash flow currently. Are there any prospects, ideas about M&A outside your own universe in Oman, or?
We have a very strong cash. We have had strong cash flows, as I show with the EBITDA being good over the last 3 years, and it's above $60 oil will certainly make good money. And we have a strong cash position. We have a nice war chest, and we are on the lookout for other opportunities. However, with drilling coming up in 49 and with Block 56, that will also require some capital. Of course, a discovery in Block 49, we will need capital to develop that. So we are in the very fortunate position that we can drill an exploration well here in 49 without having to rely on outside sources. If another opportunity shows up, another block or potentially in Oman or somewhere else in the Middle East, North African region, we would be prepared to strike. But given the strong position we have and the very good projects we have in arguably the most stable country in the Middle East, the bar is pretty high for taking on something else, because it will have to stand up to what we already have. And with strong growth potential there, as I say, I would happily do it, but the bar is high to enter into something else.
Yeah. And two final questions here. Maybe number one is that, can you mention a little bit about your capex level for next year? And on that also, how is the general environment in Oman regarding inflation in general?
Again, the capex will guide once the budget for next year has been approved, which it hasn't yet. So we'll do that in January. Inflation, well, the country inflation rate is less of interest to us. I mean, what we the Omani currency is pegged to the dollar, and that's what we report in dollars. So I mean, we have all our costs paid virtually in dollars, and we have the oil price, we get paid in dollars. So whatever inflation or deflation we see on the cost side is more a function of oil price. Higher oil price tends to lead to contractors and suppliers charging more for the services. Lower oil price is the opposite. So we are not that dependent on in-country financing.
And then maybe the final, more tricky question. When we look at the data on the valuation of the company currently, you have a yield just below 10%. You have a PE ratios around 5, and you have done buybacks in the past. And have you any idea of how you could increase your value of your company, that you get a higher interest or more? In general, the energy companies are low valuation currently, but there are different quality among the companies also.
Obviously an interesting question. In general, the market is always right, as we all know. I mean, I would certainly not argue with the evaluation we have. The best way for us to show that the growth case is not a case of the past. We have increased reserves by 50% plus for the last 10 years. If we continue to do that, or if we have a sizable discovery, say in Block 49, that would speak for itself. Otherwise, I would say it's just continue to do more of the same and continue to deliver, and then I'm sure we will get the valuation we deserve.
Yep. Thank you very much, Magnus.
Thank you.
Så där. Nu blir det avbrott, nu blir det svenska. Vi gör ett litet avbrott här. Jag var ju här och presenterade Tethys precis. Så att Gisli Linde heter jag, ansvarig för analysavdelningen. Och vi har Anders Marklund med oss, CFO för Bergs Timmer. Det ska bli väldigt intressant att höra om det bolaget. Det händer mycket i trävaruindustrin kan man uttrycka.
Väldigt mycket så faktiskt.
Så varsågod.
Tack så mycket och välkomna till den här presentationen. Och som ni ser, Bergs Timber fyller 100 år i år. Så det är ett bolag med långa, fina traditioner. Så nu tar vi steget mot nästa 100 år. För många av er så är Bergs Timber ett noterat sågverksbolag med ursprung i Småland. Jag tänker faktiskt inleda den här presentationen med att visa att vi gör faktiskt väldigt mycket annat än att vara ett sågverk. Vi gjorde en stor transaktion för ganska precis 1,5 år sedan och vi fick med oss ganska mycket intressanta saker som jag tänkte visa vad det är för någonting. Utanför Nybro utanför Kalmar så har vi Europas största anläggning för impregnering eller träskydd. Där gör vi bland annat en produkt som heter Linax som är en fantastiskt fin miljövänlig produkt. Linaoljebehandling och kan användas med fördel med utomhusbruk för väldigt fina konstruktioner. Så att det är med lång hållbarhet. Väldigt fina tillämpningsområden. Vi har en stor vidareförädlingsverksamhet i Lettland som är den största i Europa också. Det är inget sågverk utan de köper sågade trävaror och förädlar dem vidare. Där gör vi bland annat hus. Vi har precis byggt en ny husfabrik i Lettland. Och där producerar vi modulhus för försäljning och primärt då hus för bostäder. Vi har även attefallshus som vi säljs på den svenska marknaden. Väldigt intressant område tycker vi. Vi har en jättefin fönster- och dörrfabrik också i Lettland. Omsätter ungefär 150 miljoner med väldigt goda marginaler. Och efterfrågan på de här är framförallt i England. Och det går mycket till renoveringsobjekt av gamla slott och herresäten. Så att det är en högmarginalprodukt som håller väldigt, väldigt hög kvalitet. Och nu pågår ett arbete att även gå in i Sverige med de här produkterna också för att utöka den geografiska marknaden. I Lettland gör vi också trädgårdsprodukter som är stora produkter, inte minst i England. Det är staket och det är sittgrupper och fåtöljer och annat också. Omsätter ungefär 100 miljoner med väldigt god marginal. Vi har precis gjort ett förvärv. I juni i år så köpte vi en pelletstillverkare i södra Sverige som heter Fågelfors. Och har en erkänt bra produkt. Och fabriken brann faktiskt ner i sin helhet för 1,5 år sedan. Så den är helt nybyggd och den mest effektiva som finns på marknaden idag faktiskt. Där gör vi pellets, vi gör värmelox för mer hushållsbruk och vi har även ett hyvleri. Så det var ett prov på produkter som vi har fått in då i samband med den transaktionen som vi gjorde för 1,5 år sedan. Men den stora delen är fortsatt sågverk. Det står ungefär för 2/3 av verksamheten. Och sågade trävaror är i mångt och mycket en commodity-produkt. Och det vet ni också, för att vara lönsam i en commodity-marknad så måste man vara väldigt effektiv och jobba med sina kostnader. Och här pågår ett arbete för att se över strukturen. Idag har vi 6 stycken sågverk. Frågan hur många ska vi vara framöver? Det här är ju scale of economics. Som mångt och mycket ökar volymen på befintliga kostnader. Så det är ett arbete som vi håller på med. Och vi har gjort ett antal effektivitetsinvesteringar också senaste åren. Bland annat i våra sågverk i Vimmerby och i Mörlunda som ligger utanför Hultsfred. Och nedre bilden är en helt ny byggnad för justerverk som är den sista delen i produktionsprocessen där man finkapar och slutligen bestämmer vilken kvalitet det ska vara på de produkterna som vi säljer. Sen har vi också med förvärvet fått en stor verksamhet i England. som består av två delar. Dels en distribution av trävaror, alltså import av trävaror från Sverige, Baltikum och säljs till den engelska marknaden. Och sen har vi en egen hamn också. Den här ligger öster om London i en flod som heter Crouch, som är en biflod till Themsen i utloppet där precis. Och här tar vi in trävaror, dels egna men även externa kunder har vi. Och hälften av volymen utgörs av stål som importeras då från olika länder i Europa och världen för distribution på den engelska marknaden. Och vi ser det här som en fin tillgång för oss. Det kan verka lite artfrämmande att bedriva hamnverksamhet i England för ett sågverksbolag med rötterna i Småland kanske. Men den här stödjer vår satsning på engelska marknaden. Och den engelska marknaden står för en tredjedel av vår försäljning. Så att den är ju väldigt viktig för oss. Förstås. Och vi tror att det finns ett stort kommersiellt värde också i den här hamnen faktiskt. Och med på köpet fanns det en båt också. Men den håller vi på att sälja nu för att shipping är ingenting som vi kan eller vill hålla på med. Utan vi kommer att hitta externa time charter-lösningar istället. Och här har vi anställt helt nytt management som har lång erfarenhet från trävarumarknaden i England. Så att här ser vi stor potential, trots Brexit. Och ser vi geografiskt då var vi finns någonstans så har vi ett Östersjöfokus. Med den svenska delen och den lettiska delen och den sågverket i Estland också. Och en stor verksamhet i England. Och här finns det synergier i Östersjöområdet både vad gäller inköp av framförallt sågtimmer kanske men även avyttring av cellulosaflis till pappersmassaindustrin och andra kunder. Så här ser vår organisatoriska bild ut. Bergs Timber, vi är ett väldigt litet centralt team. Det är jag och Peter Nilsson som är vd. Som är anställda i moderbolaget. Sen har vi en decentraliserad affärsmodell. Så bolagen sköter sig själva förstås. Men att vi ändå ska ta tillvara de fördelar som finns genom att vara en koncern. Och vi har då redovisningsmässigt delat upp det här i två segment. Det är sågverk, vilket är den svenska delen, det lettiska sågverket och sågverket i Estland. Och vidareförädlingsdelen. Det är då träskyddsanläggningen i Nybro. Det är den lettiska vidareförädlingsverksamheten och det är pelletstillverkaren. Och i övrigt ligger den engelska verksamheten, primärt hamnverksamheten då. Och storleksmässigt står sågverken för 2/3 ungefär. Och resten ligger i vidareförädlingssegmentet då. Och innan transaktionen var det 100% i princip sågverk. Så att vi har fått en helt annan produktmix som vi tycker är spännande och som vi tror också ska utjämna marginaler som jag kommer att visa på också att det har vi redan sett. Det går inte att göra en sån här presentation utan att nämna den här lilla krabaten. Granbarkborren. Som många har hört talas och läst om. Och det här är en total katastrof i Centraleuropa framförallt. Det har påverkat vår sektor enormt mycket. Det här är ju en insekt som angriper träden, friska träd och angriper barken då, och så småningom så dör trädet. Och angreppen då i Sverige då är ju väldigt koncentrerade till sydöstra Sverige och det är ju precis där vi har våra sågverk. Så vi ligger mitt i krisområdet kan man säga. Och det här har ju föranlett väldigt många stök vad gäller produktionsplanering och annat också. Att vi måste switcha om från att såga tall till att såga skadade gran istället. Inte helt enkelt. Men framförallt så har det inneburit en väldigt stor marknadseffekt på slutmarknaden då. Det största angreppet är ju i Centraleuropa, Tyskland och Tjeckien. Och volymen av skadad skog överstiger alltså en hel årsavverkning i Sverige. Så det är enorma mängder. Och det här gör ju att man måste ta ut de här träden inom ganska kort tid för annars dör träden för att ta tillvara på och sälja. Det här har gjort att produktionen har ju exploderat, produktionsvolymen i Europa. Och marknaden har ju översköljts av plank och brädor Så prisbilden som jag kommer att visa senare, det finns det väldigt tydlig connection till det här. Va? Och, det är svårt. Priserna tror jag från toppen har sjunkit ungefär 20-25% på ett drygt år. Va? Och det är vilken bransch som helst skulle ha en utmaning att... Varsågod. Ja, man kan säga så här att den har alltid funnits. Kanada är ju ett land som har varit utsatt för enorma angrepp genom åren. Men man kan se egentligen två faktorer, kanske tre faktorer. Dels är det ju klimatet som har förändrats. Den andra hur man sköter skogen, hur man tar hand om den, hur mycket du gallrar och allmänt avverkar. Och den tredje är ju då, ja det är de två faktorerna framförallt då. Men vad man ser då sista tiden, det är att över ett år så har klimatet varit ganska genomsnittligt. Även om vi märker en höjning av medeltemperaturen. Men under året så ser vi extremer som har varit på ett helt annat sätt än vad det har varit tidigare. Och det här har då gjort att den här har trivts i det här klimatet. Det har varit väldigt varmt, det har varit väldigt fuktigt under intensiva perioder. Och då trivs den här alldeles utmärkt. Och det tredje också, som jag glömde bort men kom på just nu, då, det är då att hur ser skogen ut egentligen? För att om man tittar i Centraleuropa såg skogen helt annorlunda ut för 30 år sedan. Eller 30-50 år sedan. Det var mer blandskog. Idag har man planterat mycket gran för att det är det som efterfrågas och som industrin vill ha. Men inte alltid gran är det bäst lämpade trädslaget att plantera på vissa jordar. Och vi har den debatten i Sverige också. Att man planterar gran på jordar som inte passar. Så de här tre faktorerna, alltså det är klimatet, hur man sköter skogen och sammansättning i skogen som gör att det här har slagit till just nu då, tyvärr. Och hur länge kommer det här pågå? Ja, i Tyskland och Österrike säger man att man har förlorat slaget redan så att man avverkar inte längre utan man lämnar träden. De får stå där och dö helt enkelt. I Sverige har vi lite bättre skogsskötsel. Där är mycket omhändertaget redan, inte allt men ganska mycket. Och det är en samverkan mellan industri och skogsägare på ett helt annat sätt än vad som har gjorts i andra länder. Så att för svensk del så är vi lite mer positiva tror jag. Det är om granbarkborren men det går inte att bortse från den. Och så här ser det ett exempel på en bild då hur det ser ut. Och här ser man ju direkt hur den har brett ut sig. Och träden dör helt enkelt. Lite skrämmande. Det här är en bild över prisutvecklingen på sågade och hyvlade trävaror. Det är ett index då från 2008 i den här bilden. Och som ni vet så är ju det här en väldigt volatil verksamhet och lönsamheten hänger ju mycket ihop med hur marknadsbalansen är mellan utbud och efterfrågan. Vi har haft väldigt bra år så egentligen kan man säga från 2012-13 så har vi haft ändå en ganska positiv trend. Men här har vi haft ett dramatiskt prisfall i marknaden. Och mycket av det här kan tillskrivas just granbarkborren att det kommit ut så otroligt mycket produktion i marknaden som gör att kunderna förväntar sig prissänkningar nästa dag. Så att det har gått enormt fort. På vissa produkter har till och med prisnedgången varit 40% tror jag. Och det säger sig självt att lönsamheten är inte så lätt att hantera med den bilden då. Bara för att illustrera hur bolaget har växt. Det här var Bergs timmer innan transaktionen och sen har vi då lagt på oss ganska mycket. Så idag omsätter vi drygt 3,5 miljard eller knappt 3,5 miljard. Och lönsamheten har ju varit, som ni såg så prisbilden också, ganska driven av just den delen så att vi har haft ett väldigt bra år bakom oss. Det här är några siffror från sista kvartalsrapporten. Och då ser ni själva att vi har mer än halverat lönsamheten. Och knappt haft näsan över ytan det sista kvartalet vad gäller rörelseresultatnivå. Och mycket är ju det här relaterat till sågverksamheten. Och det ser vi på den här bilden, de två segmenten som jag tittade på tidigare. Det är ju då sågverk och vidareförädling. Och det ser vi att vi hade ett ebitda på sågverket på minus faktiskt i kvartalet. Och då ska man komma ihåg att tredje kvartalet normalt säsongsmässigt är svagt också beroende på produktionsstopp under sommaren. Men väldigt påverkat av de negativa prisbilderna. Men det som är kul att lyfta fram i den här rapporten också, det är att vi har vår vidareförädlingsverksamhet som har en opåverkad marginal, hög marginal och stabil marginal. Och det är något man kan se över längre tid också, att den här typen av verksamhet har stabilare marginaler och högre marginaler än vad sågverk har. Så genom att fått in det här i vårt förvärv så har det bidragit till ett mycket starkare bergstimmer. Och det är ju här också vi vill växa vidare framöver också inom det här segmentet. Bland annat i de produkterna som jag inledde presentationen med. Så, vad gäller 2020, vad är fokus? Jo, fortsatt strukturöversyn över sågverken. Bli en konkurrenskraftig tillverkare av sågade trävaror. Vi måste jobba med vår råvarubalans. Vad vi ställer den här borren till för någonting. Vi kommer att ta ett steg in i Sverige vad gäller Bykos produkter som jag visade tidigare vad gäller fönster, dörrar och hus. Där ser vi att det kan komplettera bra på den svenska marknaden. Vi kommer att göra en ganska kraftig satsning i England också på att öka volymen. Och det har vi tagit genom att anställa bra folk. Vi kommer jobba med företagsprofileringen också. Berätten står det, vad är Bergs timmer idag? Var har vi gått ifrån och var vill vi någonstans? Så vi kommer att vara mycket tydliga i nästa presentation än vi kanske är idag. Vi kommer att lägga ganska mycket kraft också på hållbarhetsarbete som alla andra gör. Men vi kommer att göra på ett väldigt pragmatiskt sätt och få in det här som en del i den dagliga verksamheten. Känns väldigt bra. Och sen kommer vi faktiskt att etablera ett huvudkontor i Vimmerby. Idag är vi lite utspridda så det finns inget koncernkontor egentligen. Men vi kommer att etablera ett kontor i Vimmerby i det här huset i nedre våningen här. Så att det blir alldeles utmärkt, tycker vi. Även om jag är baserad i Stockholm så jag får åka en del, men det gör jag så gärna. Får komma dit. Så, det var min presentation av Bergs timber.
Tack, Anders. Spännande. Börja lite först och främst. Det kom ju den här attacken som påverkar prisbilden dramatiskt, men innan dess var ju priserna väldigt höga.
Ja.
Och bara för att få in det här med sågverkspriser lite grann i bilden. Lite grann om du ser i stora hela, det har ju blivit en konsolidering lite grann av sågverken. Ni ska också lägga ner 2 sågverk, eller har gjort under året. Ja. Vad ser du, hur påverkar det er lite grann att det blir färre och färre sågverk där ute som levererar? Kommer det påverka marginalerna långsiktigt och prisbilden? Kan du liksom utveckla det lite grann, hur du tänker kring det?
Som jag sa tidigare, alltså framgångsreceptet för att vara en långvarig konkurrenskraftig spelare i den här branschen, det är att konsolidera. Producera mer på färre enheter. Det kommer att gå i den riktningen. Förhoppningsvis så kommer vi undan de här obalanserna också i marknaden som vi ser. Det är ju också en effekt av att det finns för många spelare idag. Så är det faktiskt. Kan vi få bättre konsolidering så tror jag att vi kan vakta marknadsbalansen lite bättre. Så vi inte får de här kraftiga svängningarna som vi har. Sen tror jag att vi kommer att vara färre sågverk i Sverige än vad vi är idag. Det är ganska tydligt. Och det är en konsolideringstrend i hela branschen, inte bara hos oss. Utan det är ju den riktningen det går. Halveringstiden är ganska snabb just nu vad gäller sågverk.
Så att det på sikt kan ju
det kommer att stärka marginalen, det är jag helt övertygad om.
Och på det då, om vi blickar lite framåt, och det är väl svårt att prognosera, men om du har någon slags, nu har vi haft ett dramatiskt prisfall som påverkar det negativt kortsiktigt här på sågade trävaror. Vad har du för tankar om det in i 2020 här lite grann? Kommer det stabiliseras i prisbilden lite grann, eller vad?
Jag hoppas ju det.
Ja, det förstår jag.
Nej, många behöver det. Det är bara att titta på ett antal också av våra kollegor, konkurrenter också. Det är ju liknande bild här. Va? Så att alla är i behov av en stark marknad. Men det pågår ju saker som är ganska positiva ändå. Och det är ett antal produktionsbegränsningar inklusive oss som gör det. Läser i Dagens Industri många som står över hjulen, inte bara i den här sektorn, i andra sektorer också. Vi kommer också stå. Det kommer att påverka marknadsbalansen. Sen är det så också de här skadade träden i Centraleuropa. Kvaliteten på dem börjar bli så dålig nu så det går faktiskt inte att göra de här fina produkter som kunderna vill ha. Så efterfrågan på fräscha produkter kommer att öka. Och de här två faktorerna gör ändå att marknadsbalansen kommer att bli lite bättre, tror vi. Mm. Men sen hur fort det går, det är väldigt svårt att säga om faktiskt.
Men ni som jobbar mycket med trävård, det är ändå ett ekologiskt material. Mm. Vad har ni för åsikt om den strukturella tillväxten som finns där? Det är mycket tal om att man skulle byta ut betong mot trä och så vidare. Mm. Vad märker ni större intresse kring produkterna? Som
Absolut. Det är bara att titta på vår husfabrik till exempel. Vi får ju förfrågningar mest dagligen att bygga i trä. Så att intresset finns, men sen tycker jag att branschen har varit ganska dålig på att hantera det här. Vi har talat för redan sålda människor så att säga, utan vi måste ju tala om det här för fler människor. Sen tror jag också att man ska inte vara träpuritan heller, bara jobba med trä, utan jag tror framgångsreceptet är att man ska blanda material. Du ska acceptera glas, betong, trä. Och göra en kombination av det så tror jag att vi kan få en bra tillväxt också i träsektorn. Och inte bara det hållbarhetsargumentet som alla drar. Va? Det är i och för sig sant då, men det säljer sig inte för självt bara.
Nej, det gör det inte. Om man då tittar lite grann på, som sagt, ni har stängt 2 sågverk nu och ni pratar om att det skulle bli viss bidragande till er marginal här och 25-30 miljoner har ni pratat om. SEK. När börjar vi se resultatet och impacten från det rent siffermässigt?
Ja, det kommer ju under 2020 ska jag säga. Det har syns redan i 2019 också, fast det döljs av den sjunkande lönsamheten så att säga. Men en del av effekterna har kommit med en full effekt 2020. Mm.
Och jag tänkte lite grann, ni berörde i början lite grann där med pellets. Det var en bra investering och det har gått bra. Om man tittar in 2020, hur mycket tror du det kommer vara av verksamheten då?
Just pellets tänkte jag.
Ja, just det, den delen.
Ja, vi kommer att omsätta ungefär 150 miljoner kronor på den delen ungefär. Så att, det är nog en hygglig verksamhet. Men och det är ju, har vi kommunicerat också, det är ju en marginal som överstiger snittet för koncernen i den affären också. Så att, det var ett bra förvärv som vi fick till. Men
som du säger, slutligen, ert fokus har varit mycket det att jobba med vidareförädling. Ni har nått väldigt bra stabilitet det här året på det. Ja. Är det någonting du vill lyfta fram? Är det så att ni tittar på fortsatta förvärv i det segmentet för att det har fungerat så bra hittills med det ni har gjort?
Ja, alltså, jag tror långsiktigt för att vara konkurrenskraftig måste man addera mer värde i alla produkterna som vi tillverkar. Så vi kommer definitivt att gå i den riktningen. Sen exakt vilka produkter det innebär, det får vi se. Men vi växer ju 10% organiskt inom det här segmentet nu. Så att vi kommer att fortsätta att växa organiskt, men det är klart att vi är intresserade av förvärv också. Det är vi.
Bra, jag tror vi tackar för Anders här, så får vi ta frågor.
Ja.
Ersättning förpackningar som ersätter plast.
Ja.
Det är ju tydligen hett för stunden.
Ja.
Har du några tankar om det?
Absolut. Det som inte blir plank och brädor blir något annat. Det mesta går ju som insatsvara i form av cellulosaflis till pappersmassaindustrin. Men resten blir ju då sågspån och annat form av flis. Och det kan man använda jättemycket till andra produkter. Bland annat har vi blivit uppvaktade av ganska många som just vill göra plaster av sågspån faktiskt. För det finns sådana etablerade processer idag, de är ganska tidigt i skede. Så att jag tror att vi kallar dem biprodukter, jag tror vi får ändra det namnet faktiskt. För att det kommer att finnas mycket, mycket mer värde i de produkter än vad det finns idag. För typer av nya applikationer vad gäller plast till exempel. Olja är en annan, att blanda in i bränsle så det blir biobränsle. Så att det finns väldigt många initiativ där.
Vi måste bryta nu tyvärr, vi har en presentation efter. Ni tar frågor med Anders efter. Ja. Tack så mycket.
Welcome everyone to the next presentation, and with us today we have the pleasure of welcoming 24/7 Office and its CEO Staale Risa. And some of you might already know me and have seen me moderating other presentations, but nonetheless I am Simon Granat, working as an analyst at ABG covering IT stocks. And without further ado, I'll let you present the company, Staale.
Thank you very much. Staale Risa, I'm the CEO in 24/7 Office. 24/7 Office is a cloud-based ERP system. So you have everything you need to run a business, everything from accounting, invoicing, warehouse management, time tracking, project management, and integrations. We have 45,000 businesses using our system today, and we've been in the cloud business since the beginning. So we're born in the cloud. So we started developing cloud-based ERP systems in the late 1990s. So we've been around for a long time in the tech, that kind of tech industry. One of the things that separates us from others is that we are targeting larger organizations. So we're not focusing on the small and micro space. Of course, we have customers in that space through our accounting partners, but we are targeting larger companies. We're listed on the Spotlight stock market, and most of our revenues are subscription-based. I have a video. It's in Swedish, so we'll skip that here since it's a more international audit here. So, but it's the system. It's built for automation, speed, and scalability. So we have developed it to use for small businesses, large businesses in all industries. One of the things that we focus on is high transaction volumes. So it's as an accountant or a professional user, it's easy to, or you can be very fast and efficient using the software. As well as we have mobile apps for more easy data integration and data input. So you have for kind of non-professional system users in a company, they can easily take their expenses, their hours, track time, do their order and invoicing through an app, which is like a simple interface. And then you have the advanced users using a more advanced interface. The focus is a lot around the financial and financial management and accounting. And around that core of accounting and finance, we have the hours, we have project management, CRM, and collaboration. And that's also standalone modules in our portfolio of a suite of modules. We also have integrations in the same space. So a customer, 24/7 Office customer, can either use our own CRM system or can integrate with any other CRM systems out in on the market. And the focus on APIs and integrations is something that we do a lot, and it's an important part of what we do. Not forcing our customers to use all our modules, but since we built them as modules, it's also integrated, and integrated with our own modules also allows us to integrate with other systems. So the API first and integration building ecosystem around 24/7 Office, the financial management part of it, is one of our strong parts. The other one is that our vision is to automate everything around a business. Whether it's the revenue side, how to automate the revenues, how to automate the cost side, the purchase invoices, how that process can be automated, automating the reporting. And if you think some years ahead, maybe the reporting is more, you get a suggestion on how you could change how you can change something within your company, and you can just let the system know that yes, it's at a thumbs up, and everything is happening. So in that vision, the long vision of automating revenue side, cost side, reporting, and also integration and data input and output between systems is something that we believe in. And the integration allows customers to integrate their own systems, having their own IT department or IT consulting doing integrations tailored for their own business. In addition to that, we have some plug-and-play integrations where you can just add from an app store ecosystem, adding on and building on the modules we have. So the mix of standard integrations and tailor-made integrations and the possibility for others to build on top of 24/7 Office is also something we believe in. The positioning, we are targeting larger companies, as we said. So we have divided small and micro, mid-sized, and small businesses, and medium-sized. And what we come from, small businesses. That's where we started. That's the easiest thing to develop. And when we move on, we've always had ambition to be a system for larger companies. And building functionality for a larger company means that you need more functionality and a broader functionality within the software. For instance, if you look at internal control in a company, it's very different from a company with 1 employee, 10 employees, and 200 employees. When you have 200 employees, you have to make sure that you have internal processes that allows you so that not the same person that have ordered something also approves the invoice and then approve the payment. If you're 1 man or 2, basically you're just switching hats, whether you're the CFO or the purchaser or the CEO. But in a large organization, you need more functionality in the platform to be able to serve the needs in that space. And that's where we, in the software side, where we separate from small and micro business systems. And the other one is transaction volume. If you're a small company in a small and micro business space, you have less invoices per month. But if you're a large organization and you're a group of companies, you're doing 500 million revenue, then the number of invoices, both sending invoices and also receiving purchase invoices, is a lot higher volume. And the people working within accounting in these companies are also trained professional users. So they have different feature sets and they need in terms of that. And that's where we've been focusing. But at the same time as we focus on them, we have the full internal control system. And as a small company, you can choose not to use all that. So you can skip all those processes and use it as a small one. So it's more having advanced and simple mode in the software. And with that growing, working with the product over time, we have a very scalable system with a variety of industries and customer sizes using it. One of the segments we're really strong in and focusing on is accounting firms. So we have a focus on that, which I'll come back to later. In Norway, we have a high market share amongst the accounting firms, and that's also what we are doing here in Sweden, attacking and working on accounting firm market. And a fun fact is that we looked at the accounting firms using 24/7 Office, and they are growing twice the pace as the industry average in Norway. So working in 24/7 Office and in the cloud, it's good business for the accounting firms. And at the same time as they're growing at a faster pace, they're also more they have higher margins than the industry average. One of the focus in like the ERP space is automation and AI, and that's also something we are working on. And one of the things with AI is that it's definitely the technology is here, but the mindset of the people are going to use it are still lagging behind. So it's a job to do there, and that's why we have this slide telling that how much are happening on the internet every minute. So, for instance, there are 3.8 million searches on Google, which means it's 5.5 billion a day. And in the year 2000, they had 18 million searches in Google. So the amount of the pace of how fast things are moving. And another story to see that AI is something that you need to start working on. Is that when we started in '97 in Norway, there was this article in the financial press saying that the internet will never be something, it will be a flop. And there's three main reasons for that. One is that it will be so much information that it's impossible to find anything. The private use will be limited, and no one will make any money of putting their products and services online. And 20 years later, the solution for those three problems is the three biggest companies in the world. So being in the innovation space and looking like the next 5 years and 10 years and keeping a pace of business is important for us as in the R&D part of this. But the technology is here. And it's important to get started because the use today is limited, but the topic of AI is high on the agenda in the management teams and then the boards of European companies. One of the reasons for us to be actually being able to deliver the technology today is that we have 20 years of history of data that we can train the AI models on. We have professional users that have used the software, so it's trained accountants, and a lot of the companies are bigger, so they also have auditors. So we know that what's in the accounting system is correct, and we can train that correct data with the scanned invoices because the long history we have. So with more than 200 million financial documents going into that training, it's definitely one of the unfair advantages we have doing working with AI. So the system is actually working for you and it's learning from you. It's something that you evolve with, and that's also one of the reasons why companies should start using AI today and not wait, because it's a learning process in a way, because it needs to learn from the data you have entered into it, and the sooner you get into it, the faster you'll see the results. So basically what happens is that we automate the process. You get an invoice into the system. The AI engine is going through it. It's looking at the invoice and also bookkeeping each line item as a separate data entry into the system, which means you have a lot of data and correct data into it. And you get two sorted into lists, one OK and one review. in the OK list, you basically just you can look at it and select all and bookkeep. And the reason why we do that is that we want the users to get familiar with the technology, because even I wouldn't sit back in the back seat of a self-driving car watching Netflix the first time. So it's important to get familiar with the technology, and that's why we allow them to do that. And there's a lot of different parts of the accounting process which can be automated with AI. We're starting with accounts payable and purchase invoices. That's where the highest volume is. And also within the accounting industry, also where they spend a lot of their time. And the other thing is that you need to have the correct data and detailed data to be able to do all the other reporting and year-end procedures and accruals and all the other services. You need like correct and detailed data. So that's the reason why we're starting there. But it's a lot of functions underneath a controller or a CFO that can be automated as the next steps. And with this technology and with the evolvement of cloud and more efficient systems, is also gives us as a supplier of this software new business opportunities and to monetize on the technology. But also it gives our customers new opportunities within their industry. So, for instance, the accounting firms, which is one of the target, our biggest targets, is that they are focusing on they're charging, their revenue model is per hour, and more efficient systems will reduce their hours. So they need to use technology to be able to make new revenue streams, both on more consulting, but also reselling software, getting their customers to use software, do self-service and pay for that, and have fixed prices on their service, which means they can automate as much as they can, and the more they automate, the better margin. So it's a win-win situation between a supplier and our customers, and that's sort of like our business model in that industry. Some update on the latest figures. We have good growth both on revenues and customers. We have improved the profitability the last quarters. We are in an investment phase in Sweden, which of course is hitting our P&L. But the last quarters we have better profitability. The customer growth, we are approaching 45,000 businesses. It's a growth of 34%. Revenues are growing 33%. And we are one of the few SaaS companies out there which are also reporting on SaaS metrics, which is, in my opinion, also where the biggest focus should be on acquisition costs, how many months of subscription you need to recover the acquisition cost of acquiring a new customer, and also the lifetime value of a customer. And that's two figures we have in our quarterly reports. Yeah. It's for those of you in the room that know the difference between the traditional software model and SaaS model, is that in the traditional software space, you basically you get most of the revenue immediately, and then you have sort of like a yearly subscription or with sort of like a small amount. And that means you cover most of your, or you get payback on your cost immediately. Whereas the subscription model, you have all the costs when you're selling, but you get a small amount every month. And that's so like a big difference between the traditional model and the SaaS subscription model. And we've been in subscription since the beginning. And that also gives the or open up for new ways of actually looking at the business, and that's why I skip so like the detailed numbers and go into what really matters, and it's the acquisition cost, lifetime value, and growth. If you hit these three metrics as a SaaS company, you're on a good and of course enough cash. You need that to be able to do that. But it's that's sort of like the three things that should be have high attention. With the growth we've had, we've increased number of employees a lot over the years, the last couple of years. So now we're 144, I think, so almost 150 people. When we started 2018, we were 67. So it's been a high growth of people the last couple of years. So now we're have enough people to fill a sailboat when we have a summer party. And to finish up, just our focus. This is the same slide I used the first presentation we had as a listed company. And it's exactly the same, and we kept that 2-year process. Before the summer, we closed the biggest deal in Sweden, HSB, 4,000 housing cooperatives doing automating their accounting with our AI, and we're on a good we're keeping that pace and that plan. So, thank you.
Okay.
Yeah.
Excellent. I think we by then have some time for a couple of questions on my behalf. So initially, given that you're operating in the SaaS space, of course, you have a very scalable business model. But even so, in the latter period, you have increased operating costs quite substantially, which you also touched upon just recently. Do you feel like you have the cost costume to capture further growth ahead, or do you feel like you need to employ more people, or what's your thinking around that?
Yes, basically what we've done the last couple of years is that we took a giant leap and invested a lot. And going forward, given that we continue in Norway and Sweden, we will grow faster than the cost side. But we will continue on investing in growth, but not so like the giant leap as we've done so like the last couple of years.
Okay. Perfect. And just to clarify, how is your revenue model? How does it actually look like? Is the majority coming from fixed payment in terms of SaaS, or do you also have a variable component that could increase or so?
Today, most of it is fixed monthly. So it's the main model is per user per month per module, and then with so like introducing AI and other automation tools, that's more based on usage, because so going forward, growth will be both from licenses, monthly licenses, in combination with more usage based, and that's all automation and AI, and also we know that especially within the accounting industry, they can do more with less people. But they get more value out of the software, which also is something that they need to pay for.
Perfect. And also, given that you are targeting these larger businesses, I presume that your operating business model is quite more complex than compared to your smaller competitors, for instance. How long are the lead times as you obtain a new customer?
It varies a lot. HSB is half a year, 6 months. process. So it all depends on where in the process you are. So, but basically between 3 to 9 months is so like the majority of the lead time.
And does this mean that it's required to have a lot of consulting revenues, etc., on your behalf, or who does the implementation at these larger corporations?
Yeah, we have some consultants internally, but basically what we want is that our partners are doing that part. So that's one of the new revenue streams for the accounting industry also, is to get more into how to utilize software in an efficient way to make to help their clients be a better, more efficient in how they operate their business.
Okay. And I guess as a final question, I was wondering around the current market environment. One are usually referring to SaaS penetration in terms of software accounting around smaller SMEs or the larger corporations, etc. How is the penetration degree in both Sweden and in Norway amongst these larger companies?
Well, in terms of the mid-size and larger companies, the cloud penetration is not very high. So the majority of those businesses, when we win a deal, they come from on-premise solutions. So the first kind of industry or segment that moved to the cloud was the small and micro businesses. So if you start a business today, no way you go to Elgiganten buying a CD and install that on your laptop. You go online. Most of larger companies, they've been around and they took their system investment like 5-7 years ago. And with AI automation, when they are replacing it, they see that there's only one way to do, and that's to the cloud. So we have the market with us in terms of transition from on-premise to SaaS in that segment.
That's crystal clear. Thank you very much for attending today. And
thank you very much.
Thank you to the audience as well.
Thank you very much.
Okay, final presentation for today, but it's super interesting. Gisli, the head of research, and today we have Fredrik Kjellgren, CEO of Cameo. And worth to mention is the ABG Sundal Collier have the ownership in this company, minority ownership. We have listened the whole day for stocks that could offer a good equity story or a good yield. But we will listen to Cameo that working with alternative financing, you can say, offering a very interesting yield on many projects, which is something that's hard to find this low inflation interest rate environment. So, Fredrik.
Oh, perfect. Thank you very much. So, good. Thank you for being here. Thank you, ABG. I really look forward to this session. So, my name is Fredrik Kjellgren, and I'm heading Cameo in Sweden. And I'm here to talk about what Cameo is, what we do, why we do what we do, and also how it works. And I will also go through the performance we have had since start. And if you like what you see today, it's really easy to get going. So if you would like to start investing and lend money directly to entrepreneurs and small to medium-sized companies, I will show you at the end how you can do it. It only takes a couple of minutes. So my background is primarily within finance, business, and product development. And throughout my career, I met so many talented entrepreneurs, people with drives and vision. It's truly amazing to see how much talent there is out there. Unfortunately, though, most of these people will never have a chance to really test their ideas, to set up a new venture, because funding is so difficult to get. So unless you have a strong personal network, it is difficult. It is very, very difficult to get funding. But paradoxically, there is a lot of capital available that would like to invest in these entrepreneurs, in these ideas, and in these people. So there's a huge mismatch between capital and entrepreneurs. So that's really the root cause of the problem that we at Cameo tries to solve. So what we do at Cameo is that we connect investors with entrepreneurs. So Cameo is a Scandinavian lending platform. So that is, we make it possible for professional and retail investors alike to invest and lend money directly to companies, so small and medium-sized companies in 3 countries. You can invest in single projects in Sweden, Norway, and Denmark. And on our platform, you can invest from as little as 500 kronor and upwards, which makes it possible for most people to build a well-diversified lending portfolio. And since publishing our first loan in May 2016, we have had a return of 9.8% on average. So in comparison, that is clearly outperforming any short-term interest funds, but also that's a return that has outperformed Stockholm All-Share Index since start. Investments in real estate stocks would have yielded a better result, but in our view, at least, we think this is a good return. And importantly, though, when you invest in these type of investments, so although we are able to give a good return, you also support the growth of local entrepreneurs. So on this picture here, you can see 2 entrepreneurs, so Rickard and Andres. So they're standing in front of a product that was completed thanks to the funding that we at Cameo were able to provide. So while we are able to provide good return to investors, we also clearly support the growth of local entrepreneurs. So we connect investors with entrepreneurs. And also by doing so, we're opening up a new asset class that has, for most people has been excluded from. So, but I also would like to spend some time just on a bigger picture. So why Cameo? Why is this needed? The World Bank today ranks Sweden as the 12th easiest country for companies to operate in. So that's we are behind some of our neighboring countries. So both Norway and Denmark ranks higher than us, but we do rank higher than countries like Finland, Germany, and Canada, for instance. So I guess this is okay. It could have been better, but it's not a disaster. When we're looking at the World Bank to also rank countries in how easy it is for companies to get credit. And they do that because this is such an important thing for companies if they should grow and be able to take the next step in the growth journey. And on this measure, Sweden ranks on a shared 85th place. So that's the same ranking as countries like Chile, Botswana, and Zimbabwe. So this is clearly not good. This is really, really not good. So this has to be better, we think at least. In the short term, though, it doesn't look like that will happen. So recently, Sweden's Financial Supervisory Authority, Finansinspektionen, recently announced new stricter capital requirements for banks. So that will lead to that more creditworthy companies will find it more difficult to secure enough funding for their projects, for their companies. So one way of looking at the market is that banks are not able to help all creditworthy companies. So one way of looking at the market is you have bankable companies that are able to secure enough funding from a traditional bank, but they're also creditworthy but not yet fully bankable companies. And in this segment, you will find ambitious entrepreneurs who want to develop and grow their business to the next level. You will see projects that they do that do not yet meet bank requirements. And also as a lender, it is usually also possible to get good collaterals for any loans that you put out. So this is the segment that we at Cameo target. So we target creditworthy but not yet fully bankable companies. So what we do is that we bring investors and borrowers together. So as a private or professional investors, you lend money directly to the company. So while doing that, you will enter into a legally binding agreement with the company. And the company, on the other hand, they will receive capital quickly, and it will receive the capital through a process that is quick and flexible. And it will also receive capital without having to give up ownership in their company. And what we at Cameo do, it's simple. We make it work. So that is we develop the loan agreements. We do the credit assessment. We administer the in and outgoing payments. So we make it work. So and Cameo comes from the English word Cameo role, which means taking a background or a facilitating role. And that's exactly the role we take in this setup, and also the role we would like to take going forward. So, how does it work in practice? So we at Cameo, we do all sorts of corporate loans, but the majority of the loans we do are construction loans within the real estate sector. And our typical projects looks like this. So a company may have been able to purchase a land with equity, and they may have been able to start the planning process and may have achieved a pre-sold rate of 20%. In today's market, with today's requirements, this is not enough to secure enough funding from a bank. So they would, in this case, then they could come to us. And if we like what we see, and if this company meets our requirements, we're able to provide a financing alternative to them, which allow them to really start with the construction phase of the project. And if you have built something, if you have something really tangible to look at, it's much easier to sell something. So repayment to us is done usually in one or two ways. Either they sell the product and thereby repay the lenders and Cameo's lenders, or they are able to meet bank requirement and thereby refinance us. So we see ourselves as more as a complement to bank finance. It's not necessarily a competitor to banks, more like a complement in this sense. So this is a typical project, and a real example is Byggvestor. So Byggvestor is owned and run by two entrepreneurs, Rickard and Andreas. They have long experience in the real estate industry. They acquired land, 4,200 square meters to be exact, in Bredsand outside Enköping, so that's approximately 1.5 hours from Stockholm. They saw an opportunity to develop this site and build 10 apartments. They did contact the local bank in Enköping, but they were unsatisfied with how they handled their loan application, and instead they turned to us. So what we then do, as we always do, we run a credit report on the company. And the most applications that we receive, we decline because the credit score is too low. But in this case, it looks good. So we choose to continue. And then we enter in our own credit assessment. And what then happened is that Rickard came in contact with this person. So this is Jacob. So Jacob is one of our credit analysts at Cameo. And so what he does is that he goes through the company, the project, the collaterals for the loan. But most importantly, he initiated a dialogue with the borrower to find a finance alternative that really works for this project and for this company. And what the credit assessment ends up with is a credit score. So at Cameo, we assess loans. We rate loans from A to E, where A loans is the lowest risk and E is the highest risk. And the interest rate we assign to each loan correlates with the risk class. So the higher risk, the higher interest rate. And on our platform, we do loans usually from between 5 to 15%. So if the company and Cameo is in agreement on terms, we then publish the loan on our platform, which looks like this. So as an investor, you can then choose exactly which loan you would like to invest in. And for each loan, you have an overview of the loan, interest rate, the risk score. But if you have an account, you can also read more. So any reference project I've done, the people behind the projects, the latest financial information for the company, etc. And you also have a possibility to ask questions. There's a Q&A function, so you can ask questions directly to the company or to us. And also you can get the details of the payment plan. So all the loans that we do have monthly interest payments. So that's also highly appreciated for most investors because you get a monthly cash flow from this investment. And if the loan is fully funded or succeeded, and you have placed a bid, the bid would translate into a loan agreement. So this is a legally binding loan agreement directly with the borrowers. So what we do, we administer the in and outgoing payments for this. And in case the borrower should default on their payment, Cameo will act as a representative on behalf of all lenders to realize the security for the loans. And many of the loans we do, we divide into different tranches. So we do that of two reasons. First, it's a way to lower the financing cost for the entrepreneurs, and also it's a way for us to control the risk in the loans. So on this picture here, you can see actually two of our credit analysts and also the head of the credit committee actually on a field visit to ensure that the Big Vestor project was actually progressing according to plan. And in this case they were, and then we published the subsequent tranche on our platform. So, and once a project is completed, like the case with the Big Vestor, the loan is repaid. So in this case, the loan was repaid after 341 days. The average time on our platform is 13 months. So it's good. So this is a project that was completed thanks to the capital that the lenders were able to provide. So our performance since start. So we did publish our first loan in May 2016, and we have since then been able to do actually exactly 200 loans to date. So we have published 200 loans. We have been able to fund a total lending volume of 494 million, and we have had an average return of 9.8%. We have so far have no confirmed credit losses, and we also clearly recommend all investors to diversify the lending portfolio. So we recommend everyone who invests at Cameo to invest in at least 10 different loans. And on our platform, the hurdles are really low. So it's 500 kronor as a minimum investment, which makes this achievable for most. So if I'm going to summarize what we at Cameo do, is we are a Scandinavian lending platform for corporate loans. we enable retail and professional investors to lend money directly to companies. And we provide access to an asset class that most has been excluded from. So being able to lend money directly to small companies, that's nothing that an ordinary person normally has been able to do before. And it's a good complement to your existing savings, and you can start invest from 500 kronor upwards, and it's no cost for you as an investor. It's no cost. And importantly, we think this is a great way to really support local entrepreneurs to grow, as we've seen in this presentation. So I only want one more thing to say to this audience, and it's really easy. If you like what you see today and you want to try it, it's really easy to get started. You can just log into this site and create an account. It takes no more than a couple of minutes, and then you're off to go. So with that, I just want to say welcome to Camille.
Thank you, Fredrik. And yeah, bank ID, and that's done deal. So
yes,
you're right. You have built a smart solution. A few things here. You have done 200 projects.
Yes.
I mean, how many do you say no to?
So we do. So the initial screening phase is probably we say no to 80 to 90% of our applicants.
And why do you say no? Is that the background, the risk of the project, or?
Correct. So the credit score, or the product doesn't make sense, or they require too high loan to value, or any other metrics that we have assigned as a crucial for us.
If I compare you to a competitor like Tethys, they do not a similar thing, but sort of.
Yeah.
What is the main difference you think between you and Tethys?
Yeah. So I think on our platform we do tranches. So that's one thing, and also the minimum amount. So you can invest from 500 kronor upward, which I think is a really good strength for us. And it's possible then to go into many more loans and build a well-diversified loan portfolio, I think. But the concept is similar, and I think probably from us as an industry, I think our challenge now is to ensure that this is not seen as something exotic or alternative. This is a normal way to get funding. So if you look outside Nordics, if you go to the UK, for instance, close to 20 to 30% of all capital that is raised to small and medium-sized companies is through lending platforms like these. So I think this in Sweden and Nordics, this is seen as something exotic, but I think it should just be seen as another way of getting funding.
Currently, you have mostly done construction tilted projects.
Yeah.
Although you do a few others also. In the UK, I think it's a more diversified market with Funding Circle as one big player.
Correct.
What do you think in the future? Will it be like 1 year, 2 years from now that you will have projects that are not more diversified portfolio of objects? What is the tendency?
Yeah, most likely, because we want to also like to offer a product or loans that appeal to our investors, and investors, some likes very secure loans with lower risk, and some others like higher risks. And I think it's like that we will see a more diversified offering from our side on the platform going forward. I think at least.
If you're going back, you said you have like almost 500 million. Almost 10% yield. It's a high figure, and so far you have managed to handle all the problems with different projects in a good way, no losses. But you have had some small problems, of course, with some projects. If it will happen that one of the companies that people have invested in go bankrupt, could happen. What do you think is the general? What will happen then? Because often I guess it's a combination of bank loan in the bottom together with some equity and then some money from indirect from Cameo. Can you explain a bit of the process there?
Yeah, then it follows the normal kind of process. So if we have a pledge in an asset, for instance, that's how we can realize the underlying. That's how we can recover losses basically. So we have had 6 defaults so far, and we've been able to recover 100% for our lenders, and that's thanks to that we have good collateral. So we have pledged in almost all loans we have in properties. So in the case of default, that would go to Kronofogdemyndigheten. I don't know what that's what in English, and we have in-house lawyers that also would run the process further if that's needed, which I think is a strength for us if you compare to some of our competitors, that we have that in-house knowledge and also the willing to do that for our lenders. So that's how we have been able to secure kind of confirm that we have had no credit losses so far. But that's and I also would like to make sure that that's no guarantee that there will not be any credit losses in the future. Likely there are some credit losses because that's the nature of this type of investment.
What is the main constraint for your growth story currently? Is it that you have lack of objects to look at, or is it that you would like to have more investors from here?
Yeah, no, I think actually if you compare this model with the traditional banks, we don't have our own capital. So if we have a lot of inflow of good product, we need to match with capital. And I think what we have seen in the last quarter is a lot of inflow and interest in this form of financing from borrower side. And now our challenge is to ensure we can match that with investors. So that's where we stand right now. But we're working on different solutions, and we also see that the placing power among the crowd, that is our investors, is also increasing over time. So I think that's also a way when you see it works, you get a cash flow every single month, and if you have a portfolio of, on average, there is 13 loans that our investors invest in, you get a cash flow every second day almost. So I think we have started to prove ourselves, and that also goes into an interest on the crowd.
Two final questions then. Number one is that the normal procedure from you started in the project up on a web page until it's closed, how many days does it take?
Yeah.
And then second question is that we have seen some of the projects you have is guaranteed.
Yes.
So it's already secured from the beginning. What does that mean for the ones that are not in that consortium outside that?
Yeah, great questions. The first, it usually takes, depending how big the loan is. So if you publish a smaller tranche for a couple of millions, sometimes we fill it less than an hour. And if it's a bigger tranche, like 50 million, which is then underwriting guaranteed loan, then it's for the whole period, which can last up to 2 weeks. And in order for us also to be a trustful alternative to larger borrowers, we need to ensure we can fill the loans. So we have a underwriting club which guarantees loans, which means that we always first publish it on the platform, and we let the crowd invest in the loans. And if there are anything left, we will then go to our underwriter, which then bring the remaining part of the loans, which I think is a good way for ensuring that everyone is allowed in and then invest in the loan on the same terms. We can just make sure that we can guarantee the loans and get our promise to the borrowers so they can build their projects.
Okay, thank you, Fredrik, for this last presentation. And in March 2020, we will have a new investor days here at probably the Haymarket.
Yeah.
Thank you very much,
Thank
Fredrik.
you very much.